Good morning from a chilly Nairobi. What a time to be alive. Money makes the world go round. And there's so much happening in this space at this time from, who's buying who, are you buying the dip, Bitcoin, crypto, regulation, all this stuff happening now. Very, very exciting time to be alive and in this market at this particular time. My name is Mbogo Njehia, and I'll be your moderator and MC for the East Africa Fintech Summit. To get us started and to tell us more about what you're going to be expecting over the next 2 days, I'd like to welcome Laura Chite, the CEO of CIO East Africa, to get us started. Marketing, she leads projects with creativity, intuition, and great taste. Laura can comfortably customize marketing activities as per requirements, drive customer relationships, and improve customer satisfaction. Plus, she knows how to own market intelligence in different countries and industries, giving back insights and contributing to the objective of growing market share products. Laura, over to you.
Thank you very much, Mbugwa. Good morning, ladies and gentlemen. Thank you once again for joining us at another CIO East Africa Summit. We are very happy today to host you at the Fintech Summit. This summit was not hosted last year in 2020. And of course, we all know why this is due to the pandemic. But today, it is a pleasure to host you and to just go through some of the things that I have observed and generally I think has been happening in the market from a fintech perspective. So to kick us off, as Mbugwa introduced me as a marketing person, the first thing I want to talk about is marketing and virtual summits and how we should network and take advantage of the fact that we are here to network and get new content. So if I can kick off immediately, I'd like to see my slide on the screen. Thank you very much. Still waiting for my slide on the screen, but as you're waiting for the slide on the screen, first things first, let us network on the platform. As we are networking on the platform, please make sure you meet somebody new. Virtual summits have given us the opportunity to network more than we would at a physical event. You can use social media, you can tap and meet somebody on the networking platform or the events platform we are using, or you can book a meeting with them. You can visit our partners in their partner booths. So first things, introduce yourself, tap somebody the way the slide is showing you, tap somebody you've never met before, say hi to them, welcome them to the summit, and let's have a good time today. So I want you to post your first social media post today by doing this. Take a picture of the screen, post that you are live at the CIO East Africa Fintech Summit, tag at CIO East Africa, hashtag CIO Fintech Summit. That's what we are going to do as we kick off today. It is important that we celebrate the fact that we are able to have a fintech summit because we do know that the fintech world has changed the way we've transacted, especially during the pandemic period. So, moving forward, can I have my slide now on the screen? Thank you very much. We're here. Thank you very much for putting the slide on the screen. I'd like us to go back one slide. I'll just take us back one slide so that the audience can see what we're talking about from a social media perspective, from a networking perspective. Great. My apologies for that little technical hitch, but you all do understand, as technology people, something always goes wrong. Murphy's Law. I don't know why it's not loading, so I will go ahead. Now, let's talk about FinTech 2019 to 2020. In 2019, when CIO East Africa hosted the last FinTech Summit before this year, we talked about several things as the highlights of that year. We talked about AI and RPA being a big thing around FinTech, mobile payments. This is nothing new to all of you in the session today. You do realize that this has been one of the biggest moving things today for us, especially after the pandemic hit. Fintech application developments were going to continue rolling at a very high speed. This morning, as I was coming in, I was listening to Munjin Thiga and Ali Hussein as they were talking about the Fintech Association of Kenya on Capital FM. And they were talking about how the fintech world has grown and some of the statistics they were dropping. The fintech world has grown from a statistics perspective, from an investment perspective, from a consumption perspective. And this is because of the developments that are happening in the fintech world. Blockchain and financial inclusion was another big thing that was happening in 2019 and continue to happen in 2020. And then RegTech. This is something we cannot run away from, especially when you're talking about financial services and you're talking about technology. So this is a quick flashback into 2019 and what happened in 2020. What should we look forward to in 2021? From my personal observation, at least based on what we talked about in 2019 and what I saw in 2020 during the pandemic, the combination of fintech and the pandemic has created financial inclusion. What do I mean by financial inclusion? The bottom millions. The bottom millions have been able to continue interacting from a trade perspective, from a transaction perspective, from a money movement perspective, from a survival perspective. This is the power of technology, the power that technology has brought to the world today because of the way we've been closed up in a small space and have not been able to move around. Because of technology, the economy has been able to continue moving, and those who would have suffered, and we do know that we do have a large population of the unbanked in Africa. So for those who have been suffering and would not have been able to interact in any way from an economic perspective, have been able to continue doing that because of fintech. So in 2021, and what should we expect in this session today? When we were putting together the agenda for the next 2 days, we looked at several things that have affected the fintech world and will continue to evolve in 2021 going forward. We do know that we are not back to 100% from an operations perspective. But thank God and thanks to technology and thanks to the fact that Africa is moving very fast from a tech perspective and we are leapfrogging and we are seeing the amount of investment that is coming into Africa today from a startup and investment and technology perspective. Things are moving very fast for us. So we have to continue focusing on fintech and not drop the ball going forward. So technology, as we know, has created a borderless world, which is fantastic. And this is possible because we are able to interact and the world has become a small village. So we're able to trade. If you're sitting in Kenya, you can trade in the US. If you're sitting in Ghana, you can trade in Finland. So it doesn't matter where you are. If you're in Tanzania, you can trade in Nigeria. So this is what technology has created for us. We are now borderless from a perspective of trade. And money can move in different parts of the world because of fintech. Security comes up over and over again when we talk about fintech. Why does it keep coming up? We're going to hear a little bit more around this. Cloud. This is a buzzword that I keep telling the audiences about. Every time we have a summit, we talk about cloud. Cloud is the only way we are able to stretch and be able to reach millions and millions of people and be able to deploy our technology. Payments have gone global. As I said earlier, when I talked about technology making it a borderless world, nowadays we're talking about payments being done from a local perspective and from a global perspective. So you're able to receive your foreign currency. You're able to receive your local currency. So we're talking about depth and breadth. Innovation. How do you make sure you have reach and your reach is frequent and you have proper yield out of that reach? For those of you who engage from a sales perspective and from an economic perspective, you know about RFY. So innovation makes this possible for us. RegTech and compliance. We cannot even talk about this enough. We have to look at regulation and we have to look at compliance. And for me, the biggest thing is when you talk about regulation and compliance, we're talking about things like dealing with people's data. Data analytics is important. From a technology perspective, you're collecting a lot of data. If there's no compliance and there's no regulation around that, then you get to a point where you risk the audience that you're dealing with. So we must make sure that we understand, even as we are trading in the world from a technology perspective and financial services perspective, that we understand what the regulation and compliance is about. And then collaboration. The different financial services industries that we have across Africa and across the globe, we really need to think about how can we collaborate. There's the technology guys and there's the guys who provide the financial services. How can you collaborate so that you focus on your core business as a financial services institution and the technology guys focus on their tech business, which is their core business, which is technology, so that we're able to come up with great innovations and we're able to serve the masses that we are supposed to be serving. At the end of the day, you're not supposed to be losing business, but you're supposed to be gaining business from a technology perspective. So how do you increase business? What is part of your strategy from a fintech perspective as a financial services perspective? Which technology company have you partnered with to be able to start building all sorts of solutions and innovate and build apps that can be able to improve your engagement with your customers? Customer is king. So remember, focus on your core business, look for partnership, and then be able to build something that works and scales for your business. This is why we have the Fintech Summit. Bottom line is, the job of CIO East Africa and hosting the Fintech Summit is to be able to connect you to technology solution providers so that you're able to come up with robust solutions that can make life so much better and easier for you, and you can continue to see profits. Yes, I know last year was a bit difficult, especially for financial services institutions, but we are telling you here today, we are here to tell you, and you will witness it from all the speakers we have, that the solution, if you take up technology, you will perform much better going forward. So, talking about all those things around about fintech in 2021, the big buzzword is neobanking. Okay, we have seen a lot of people talk about neobanking. I've seen my chairman post about neobanking all over LinkedIn, and I think he really wants to talk about it today. But what I didn't realize is that most of us have become neobankers without realizing that we have become neobankers. Why do I say this? For me, from a personal perspective, I cannot remember the last time I walked into a banking hall to transact in any way. All my transactions are online. In fact, the other day when my bank called me to go and pick up a new card and do all those things, I was asking them, why would you ask me to do this after so many years? There must be another way that we can interact, or I can be able to get my card, change my PIN, do all sorts of things. And this is where technology checks in. So all I'm here to tell you today is that most of your customers have become neobankers. So you have to make sure you get them comfortable and adopt this new way of banking. If it is not part of your strategy, you really need to think about it today, because this is a whole virtual way of banking. So you really need to think about it today. After we are done with the session, go back to the drawing board and think about how you're going to make your financial services institution fully virtual and deliver up-to-date services to your clients. Now, I want to talk about a little bit about the CIO shopping cart. As you do know, we always have an array of products that we are always pushing. We're reaching out to you. We're trying to make you more comfortable with technology. We're trying to make sure that you're up to speed with technology. So what do we have in store in the next month? After we are done with the Fintech Summit for the next 2 days, in June, we are introducing a new summit known as the Marketing Technology Summit. And why is this important? This is important because we've realized a lot of organizations are actually moving into digital marketing. The reason why I'm bringing this up today during this session is because I know a lot of you technology decision makers must work with your marketing divisions and your customer service divisions, okay? For you to make this successful and this partnership successful, it is important that you make sure that you invite them to join us for the Martech Summit on June 24th, which is next month. We cannot deny the fact that the world has gone global. We cannot deny the fact that our customers can not only be right where we are or where we physically engage with them. We cannot deny the fact that for our brands to do better, we must grow them. And the only way you can scale is through digital marketing. So please feel free to join us in June for us to talk about some of the solutions that are available from a digital marketing perspective. There are amazing solutions out there, of which CIO East Africa realized that from an Africa perspective or from an East African perspective, we are not fully aware of what solutions sit out there. So we are finding ourselves in a situation where we are scrambling and we must remain ahead of the race. So how do we make sure we continue growing our brands and increase our visibility so that we're able to increase our business going forward? And then secondly, we have our East African publication. Please go online. Look at our publication. It is so much easier to purchase it. It has been uploaded. Stacy has asked me time and time again to talk about the publication and talk about subscription. So we urge you to go and pick up our publication, which has a lot of interesting content for you. It has recaps of some of the summits we've run. It has interesting stories from some of the solutions that our partners provide. And it has interesting stories, also case studies of some of the amazing things that end users are doing. So please pick up a copy of our magazine, and please remember to join us for the Martech Summit. As a parting shot, banking has to work when and where you need it. The best advice and the best service in financial services happens in real time. Customer is king. Customer is real time. If I need a service today and now, I expect to get it where I am. Whether it's on my phone, whether it's on my laptop, whether it's I don't know, wherever it is, but I expect to get my service wherever I am at any time. And this is based on customer behavior. I talked about data, and customer behavior is through data. So RegTech and compliance are very important as you're collecting all this data. Mobility is also important. I've talked about apps being developed and gamification. We cannot run away from the fact that gamification is very important. And why is it important? It is because a large percentage of the African population are youth. Okay, so let's not forget who your audience is. Your audience is the youth. This quote is by Brett King. Think about this, ponder over this as we're going through Fintech Summit for the next 2 days, and we hope you will see value and you'll be able to find solutions that will help you moving forward. Thank you so much to all our partners for joining us today. Thank you so much for making this possible. We look forward to some of the solutions that you have to share with us. I'm looking forward to learning something new, and I am so happy that the audience has been able to join us. We do hope that you will find value. Thank you so much to our speakers and moderators, and I look forward to seeing you tomorrow morning when we open day 2 of the session. Thank you.
Thank you, Laura. Quite a pithy intro. There indeed is quite a lot to look forward to and unpack. RegTech, neobanking, new tools are some of the themes that I'm personally looking forward to learning more about over the next 2 days. Moving into the program, in our leadership segment, our first keynote is by David Cracknell. Experience knows no bounds for David, an experienced technical director with a demonstrated history of working in the financial services industry, skilled in business planning, analytical skills, market research, management, and proposal writing. David is a strong business development professional with a postgraduate diploma focused in financial management from the University of Sri Jayewardenepura, Colombo, Sri Lanka. What is the future of fintech in Africa? David, let us know.
The future of fintech in Africa. I'm going to start by talking about where we are now and then moving into where I think we're going to be. So where we are now. Well, we know that digital financial services have helped to drive financial inclusion with the launch of M-Pesa, with mobile money, with agent banking. And it's on the basis of this launch of digital financial services that we then can see the growth of fintech. But also digitization is transforming financial institutions. So, for example, 97% of Equity Bank's transactions are now digital. We have growing ecosystems. The payment platforms and the extension of interoperability have created the basis for this. We're also now getting laws and frameworks to enable digital finance. So, for example, data protection regulation, the rapid extension of regulations similar to GDPR, is creating the potential at a later stage to share data. So in terms of data sharing, we are beginning to get central banks in Africa with statements of intent towards open banking and data sharing within the infrastructure, although it's going to take years to realize this on the basis of how long it took in Europe. We haven't yet really seen regulation of financial technology, but it is moving in that direction at the moment. And you can see that with the registration of the nano credit providers in Kenya potentially with the CBK. We're also seeing the growth of payment associations, fintech associations, and the support ecosystem through incubators, accelerators, and labs for financial technology. So that's, broadly speaking, where we are now. Obviously, there are many different types of financial technology according to the market. But we have a number of challenges. We have uneven take-up of fintech across Africa. This is particularly the case in smaller markets. We have less developed digital ecosystems in Francophone Africa, for example. We have capacity centered in only a few hubs: South Africa, Kenya, Nigeria, Egypt. The leading Francophone hub is currently ranked as a city around 200th in the world. So we still have a lot to develop in Africa. I think South Africa as a whole is rated something like the leading South African center is about 40th. So we're not yet competitive worldwide. Financial conduct issues will continue to become more important as fintech grows. And we're going to also see the growth of digital financial exclusion as a serious subject. So what's going to happen in African fintech? I think we're going to see the growth of real-world use cases facilitated by financial technology. Unlike, let's say, in Europe or the US, where we have algorithmic trading and lots of technology to improve the back office, we're going to see a lot of things that are customer facing. So we've seen so far nano credit, e-commerce, foreign exchange. We've seen pay-as-you-go solar. But we're also going to see financial technology linking into other technology ecosystems. And this is going to be quite a big thing. So we're seeing mHealth, we're seeing agri-tech. So we're going to see a growth in that. And we'll also see products and services now extending towards specific groups of people. So extension of products and services for the gig economy or growth in alternative finance, for example. The second major prediction would be app-based platforms will be developed around user groups or value chains. You can already see this in agriculture with KCB Mobigro, Safaricom Digifarm. Obviously, there are operational challenges and adoption challenges, but we'll get through this phase and we're going to end up with platforms that combine financial technology with information and other services. The third prediction would be the growth of shared platforms and then competition of financial technology through those platforms. So shared platforms, banking as a service. We're seeing, for example, the SACCO regulator in Kenya, SASRA, developing a shared platform for SACCOs. We're seeing the ABC Shared Agents Initiative in Uganda. But to maximize the potential of financial technology, we need access to data, both quality data at an individual level and big data for data analytics. We also need the ability to analyze data. So what's this going to mean? Over time, we're going to see the growth of data aggregation and data aggregators as a service. So this will obviously be facilitated through open data and the need for data-enhanced products and services. And we'll end up seeing things like the commercialization of data sets, clearly subject to data privacy laws. We'll see, as my fifth prediction, financial institutions adopting fintech. We're beginning to move in some markets away from financial institutions thinking of fintech as competition and more in the nature of collaborators. We're seeing labs hosted by financial institutions already in some markets. So, for example, Standard Chartered in Nairobi, Stanbic in Uganda, and some of the South African banks. We're also beginning to see collaborations with fintechs and development of app-based platforms that connect into financial institutions. You can see this with Equitel, where they have an app that has a lot of financial institutions connected, fintech connected into that app. We're also seeing digital transformation of financial institutions, and this creates the ground for digital financial services beyond just making payments, but into new use cases. So we're beginning to see ways in which financial technology can contribute to that. We'll see fintech for client-to-bank integration. We're beginning to see banks talk about ERPs and using ERPs and connecting to clients' accounting systems or stock control So we're beginning to see this. There'll also be in financial services a focus on de-risking through the use of data, through the use of algorithms. So again, another push. My own take also is we're going to see corporate finance related fintech. Our ability to use data will lead to a growth in business and company level analytics, which will fuel alternative finance. Though growth will be limited until we can regulate, for example, equity-based crowdfunding. Over time, this won't happen immediately, but over time, we're going to see huge opportunities in trade. We will see new opportunities from the Africa Continental Free Trade Agreement and lower border controls for smart contracts, for blockchain facilitated transactions, especially now that we're beginning to get widespread digital identity across Africa. And so there's going to be a significant evolution in trade finance and significant growth. There's also going to be an evolution in digital fiat. We talk in Africa about cryptocurrency, but what we're now beginning to see is that central banks are working on and thinking through central bank digital currency. And this will be particularly useful for trade. So we'll have investment instruments that might be speculative, like Bitcoin, for example, but we're now going to see countries issuing their own digital fiat. And this digital fiat will address issues related to KYC, AML, CFT. And digital fiat will be extensively used in trade. We're also going to see a broadening of the fintech umbrella according to the nature of individual markets. So, for example, in Mauritius, I would expect to see fintech centered on wealth tech, offshoring, and things like that. We're going to see blockchain, which is increasingly going to be used for asset registries, land registries, and, as I said, trade. There are going to be areas which won't please everybody, because we will see the evolution of the taxation of digital financial services. We can see this in Kenya with digital services tax and taxing, for example, Netflix. So we need to develop taxation principles for financial technology, otherwise we risk damaging the industry. And as financial technology becomes part of life, an aspect of life, we may well then see the gradual taxation of the informal economy. Regulation. We will see the continued growth and evolution in regulatory sandboxes, continued coordination between regulators, the growth of supervision technology, a gradual shift in regulatory focus from regulating registered financial institutions to regulating by type of activity that the institution does. This leaves a few interesting questions. Big tech. We will see the evolution of big tech in different ways in financial technology, simply because of the nature of who they are. But we're quite likely to see big tech integrated into financial institutions and being a platform through which other financial technology can work. People might ask me about digital banks. Are we going to see digital banks and widespread digital banks? Yes, we will. There will be a few. There are already a few digital banks in Africa. But I think there's going to be a greater focus on digitizing banks and, if you like, neobanks emerging from banking groups. So you may have a banking group that will set up its own neobank. And there are many reasons for this. Partly it's the money involved, but it's also the technical skills. But for me, there's a fundamental feature that we need to see to make this new reality happen. And this is the evolution of thinking of financial technology as a national asset. We need positive policies to encourage investment in financial technology, to encourage the STEM education for the human capital to grow, to encourage the movement of labor, so work permits and things like that. So there's a whole support infrastructure that we don't really have at the moment. And yet other countries, for example, in the UK, they've recently had the Khalifa review of financial technology, and they propose a whole series of things to really help financial technology grow as a national UK asset. Well, African countries need to be thinking in that way too, for our fintech to succeed. So those are really my predictions for the future. And whilst I'm not certain that all of these predictions will come true, I'm certain that some of them will. Thank you.
Businesses are rapidly adopting cloud computing, taking advantage of its flexibility and speed. Whether consuming SaaS applications, building cloud-native applications, or migrating existing applications to the cloud, finding a security solution that addresses a diverse set of needs is critical. Fortinet Cloud Security Solutions deliver. Get the confidence you need to deploy any application on any cloud supporting any initiative. Fortinet supports all major cloud providers, ensuring that critical assets are secure and that security is manageable. The Fortinet 3-pillar cloud security strategy provides the same level of security across multiple clouds by natively integrating security into the cloud platform, defining security policies for cloud services, and leveraging cloud services for security, ultimately enabling automation of security services. Fortinet provides the industry's broadest set of cloud security products, enabling you to use the same security in the cloud as you have on premises. By using purpose-built security tools in the cloud, you'll save time by leveraging existing skill sets. By managing security across multiple clouds through a single pane of glass, and by automating the security lifecycle management, you can better leverage existing skill sets and accelerate the confidence to deploy applications anywhere. From consuming cloud applications to building applications in the cloud and migrating IT to the cloud, Fortinet Cloud Security Solutions cover the broadest set of use cases, delivering the flexibility and confidence to use the cloud in a way that best serves your business.
A fantastic look into the crystal ball. 2 challenges from David that stood out for me. 1 is that there's an uneven uptake of innovation, and 2, there is fragmented capacity across the continent. Hopefully, we see these and all the rest as opportunities to increase the total addressable market for different products and services. Now, where value is created, there is bound to be nefarious interests, and this is a fact that we cannot ignore. Imran Chowdhury, country manager at Fortinet, is widely experienced in cloud automation, software, hardware, networks, and the security business. This allows him to be well in tune to articulate a complete solution to a wide array of customers, while helping them choose technologies that fit their needs and business requirements. Imran has great analytical skills and an ability to understand business situations, with a proven ability to develop and initiate business development strategies and discussions with key stakeholders across the business. Let us now hear from him about intelligent cybersecurity engineered for the financial sector. Imran.
Good morning, everyone. Welcome to this morning's summit hosted by CIO, the Fintech Summit, one of the most important sessions running this year in East Africa. My name is Imran Chowdhury, the Country Manager for East Africa, and welcome to this keynote speech around intelligent cybersecurity engineered for the new financial sector. So before we begin, we'll be taking the financial sector and looking at what are the new shifts and changes taking place in that financial sector. So retail banking seems to be the one driving change in the financial sector today, with most financial organizations reporting that retail banking was the one driving a large part of their revenues, and that's where they were making contact with their customers. And so it has now become the main focal point for every financial institution you talk to, whether they're banks, they're SACCOs, or they're any financial institution within the BFSI space. But let's take a quick look at the retail banking, what's happening out there. So retail banking traditionally has been serviced by the banking sector, usually the large banks, small, medium, large banks, community banks like the insurance and the microfinances. But there's a new shift there now. We are starting to see a new type of player coming into that space. And these new players are digital natives. These are the fintechs, the challengers, and non-fintechs service providers, example, retailers and big tech. There's a renewed interest from digital natives around retail banking, and there's a push from them to get into this space. Some of the top players in that space from the traditional banking space, these are names that you see every day on billboards. Barclays now, ABSA, HSBC, Citi, JP Morgan Chase, are now being challenged aggressively by the digital natives. Big tech, Google, Amazon, Ali, Tencent, Apple are all getting into retail financial payments solutions. Fintech players like PayPal are offering end-to-end wallet solutions. Challengers now coming into that space are now offering new innovative ways to manage your money, to make it easier for you to be able to run transactions, and most importantly, make it completely paperless. So what's the difference between traditional banks, fintech, and big tech? So traditional banks are slow to adopt new technologies, while fintech and big tech are very fast adopters of new tech. The advantage of new tech is their ability to deliver a new customer experience. And this customer experience is what is driving people towards fintech and big tech. More digital natives are trusting fintech and big tech over traditional banks, in the sense they believe the fintechs and the big tech are able to provide a high level of security and privacy when it comes to their data. Mostly all segments are able to reach out to a new size and scope of customer. All of them are able to acquire and retain customer data, but traditional banks are not able to move fast enough to new market. Fintech and big tech are taking that space pretty quickly. Apple Pay, Google Pay, mobile wallets, things that big tech and fintech can easily roll out are faster and more agile than our traditional banks. Regulation is always a problem. It's a key discussion that's going on with any player in the BFSI space. Regulator is always trying to ensure that there's fair play and that everyone meets the required standards to operate within their specific geos. Data privacy now has become a big norm. Many consumers are now demanding that their data remain private and confidential. Banks seem to be doing a better job than big tech and fintech, but that is changing fast. When it comes to the ability to lobby for these players, banks seem to have the favor for lobbyists, and they're able to push through legislation that favors banking over big tech and fintech. So what's the critical transformation that's taking place in the financial sector? There's a need now for a new type of mechanism to connect with the customer. There's a new need for customer loyalty. There's a need for the ability to roll out new services on the fly. There's the ability to deal with new challenges, global warming, COVID-19, probably COVID-20 next year, we're not sure. And over and above all of this, the regulator is coming up with new standards almost every day. So traditional banks, big tech, fintech now have to adhere to all this new regulation and compliance that's there. So everyone wants to prepare for the future. Now that COVID has accelerated transformation and introduced more paperless payments, there's an increased risk that all players are looking at in terms of data privacy, in terms of the ability to secure transactions that are happening from buyer to seller and seller to supplier, improved operations and efficient means of transferring money from A to B at a reduced cost, new partnerships with big tech and fintech, and most importantly, there's a huge increase, and we're seeing a big spike in increase in governance. Here in Kenya today, We've got the Data Privacy Commission that's been set up, and very soon we'll be seeing them actively pursuing privacy breaches that will be impacting everyone in the financial sector space. There's a big rush from the FSI space to becoming digital champions. The reason why everyone's rushing towards becoming digital champions is that they want to maintain a competitive difference. They want to be able to retain and grow their customer base. And most importantly, they want the ability to roll out new products on the fly. So what is the financial sector looking at? They're looking at the use of big data, artificial intelligence, and analytics to be able to manage their data. They're looking at APIs. APIs are the new drivers of the new financial sector. The big techs and the fintechs are big adopters of API. They want to be able to use IoT. They want to be able to use automated voice, your ability to call a call center and you're able to navigate an automated voice platform that's able to respond to you. If some of you ever call the Apple helpline, it'll automatically tell you you're speaking to an automated robotic voice system, and it's able to understand your speech, translate it, and respond to you. Blockchain is becoming a big change in fintech. Everyone's looking at how they can use big blockchain to be able to reduce the time for transactions, reduce the cost of transactions, and be able to offer customers a new experience when it comes to financial services. So how is tech delivering industry trends? It's moving customers from their traditional way of doing things. So the need to walk into a branch office to be able to check your bank balance is now done using a mobile device. The need to build brick and mortar and the need to grow your data center, the need to have the ability to cross-connect with upstream and downstream partners. So tech is enabling many industry trends in the financial sector today to allow them to deliver this new experience that customers are demanding. So what are the different champions that we're seeing out there today? Who are the players that are now transforming how the financial sector looks like? We have the open bank, the intelligent bank, the resilient bank, and the customer-centric bank. So we're seeing 4 different players all rushing to become the next go-to financial service provider for us, the consumer. The open banks are more digital native ready, easy to adopt new model, embraces open banking and APIs, and is a big cloud adopter. They're all about being transparent. They're all about being the first to market with a new product, with a new service. Intelligent banks are investing in digital banking. They're taking transformation a bit slowly. And they're big adopters of disruptive technologies, blockchain, AI, big data. And they are offering a new type of experience to customers using these disruptive technologies. The resilient bank type are looking at business continuity, looking at gains, looking at how they can control their momentum and growth, are at 50-50 when it comes to adoption of new technology and push for automation. So they're in between adopting this new tech or moving on with their traditional methods. Customer-centric bank owns the customer relationship. They're all about how they manage you. How did they service your requests? Were they able to provide you all the information you needed? And you find as human beings, we still love the fact that when you walk into the bank or you walk into the SACCO or the microfinance, that there is someone out there who will offer you a coffee and listen to your problems and is able to give you a solution. So the customer-centric banks are very pro-focused on how they deliver the experience to the customer. So as digital transformation gets a grip on the financial sector, let's take a look at the good, the bad, the ugly of digital transformation. The good of digital transformation is the experience customers have, and any financial services player who adopts digital transformation is seeing an increase in revenue, an increase in customer retention, and their ability to grow their market share. So digital transformation is here, it's here to stay. It needs to be adopted by financial players, and it's just a matter of time before it becomes the new norm in the financial sector. The bad side of this is that the customer now becomes the one to determine what your reviews and ratings look like. It's no longer the regulator. It's no longer your balance sheet. It's no longer your P&L. Customer now will be the one rating you in terms of service delivery, in terms of their ability to open a bank account digitally with you, their ability to access resources and services, the ability to access products. So the customer now becomes the single person to rate the entire process that the bank has invested on. If it's a good one, you get a high rating. If it's a poor one, I promise you, those digital natives will give you a very poor rating And unfortunately, this information remains on the World Wide Web for a long time to come. When you have a poor rating, it directly impacts everything you do. The ugly side of all this is if financial services or financial players do not adopt digital transformation, there's a risk of failure. There's a risk of not being around tomorrow. Customers are now moving to organizations that allow them to connect 24/7, 365, be able to check what's going on with their products, what's going on with the new services on offer, what can they do with their money, how can the organization help them manage and grow their money, and advise them. So if any financial player does not follow through on digital innovation, does not have a plan around digital transformation, there's a high risk that they'll not be around tomorrow to talk to you. So as digital innovation sets foot in the financial sector, cybersecurity now becomes a key discussion. The amount of cyber risk that organizations are facing today is significant and continues to grow. Banks are faced with a new problem. They're now trying to secure how customers are accessing their systems. They're trying to secure how the workforce is accessing the systems. They're trying to secure how their systems are all over the place, from their main data centers to the cloud data centers to third party to upstream service providers like Google or Ali or Apple Pay or PayPal. And suddenly now these banks are faced with a huge new attack surface that they had never before thought about. These new risks add to the ability of the organization to roll out digital products and digital innovation. As much as banks are on a digital innovation roadmap, so are the threat actors. Threat actors know that financial organizations are the most lucrative when it comes to cybercrime. You can hold a bank ransom, you are able to steal their data, you are able to sell their data, and if there's any cash left on the table, you're probably going to pick that up as well. The threat actor motives are changing almost on a daily basis. They're after financial gain, they're after your business plans, they're after your innovation plans, they are after, most importantly, customer data, and they will use all kinds of attack means to get in to try and achieve their objectives. So threat actors are constantly innovating new methods of attacking financial players to be able to get in and do what their objectives are. So what are the key targets for cyber criminals today when it comes to the financial sector players? Data. Data is big. Data today has a dollar value. It's probably at one time going to be more expensive than oil. So data is increasing in value every day. So cyber criminals either want the data to sell onwards, or they need the data to compromise customers, or they simply just want to harass the bank and do something else with that data. Intellectual property comes in second. They want to know what new products you're rolling out. Are they able to take your product and its back-end software code and APIs and sell them onwards to someone else? Everyone's looking for an easy way to roll out digital innovation, and digital innovation is very expensive. The cost to roll out a new product is very high. There's infrastructure, there's software, there's APIs, there's a lot of SDK testing and implementation. By the time you have a working product, you spend quite a bit to get that product out there. So that becomes your IP. And banks and financial players now need to secure that IP so they have a competitive edge over everyone. Disruption to services, shutting down ATMs, shutting down branches, shutting down transfers. This directly impacts all customers, directly impacts economies, directly impacts everyone when these things happen. The cost of risk is growing. Every time there's a compromise or there's an attack on a financial player, there's a direct cost factor to the organization itself. And just the other day, I was looking at a formula that somebody put on the internet on how to calculate the cost of cybercrime. I'm happy to share this after the presentation on email. It's quite a complex formula that has 7 variables that, when added and multiplied together, give you a dollar value, or what is the cost of a cyber attack or a cyber downtime for a financial services player. So how does Fortinet help our customers ensure digital success today? We are working with our customers on what we call providing them with a core end-to-end digital security platform. We're able to help customers secure everything that they own in terms of their data, their processes, their technology, and various areas of their segment of the organization. We are also able to help financial players meet governance and compliance. This is one big area that Fortinet really excels in. As we build our security platforms, we have one thing in mind: how do we help customers meet compliance and governance? We meet most of the ISO standards, most of the NIST standards, PCI DSS compliance, and we are able to help customers achieve these objectives a lot faster compared to a lot of the players out there. Today, what is the economic value of the risk that most organizations face out there? Back in the day, financial sector players could easily contain cyber risk because they were either not connected to the World Wide Web, or their connectivity was limited, or how their branch networks were set up were confined to connecting back to the HQ, and none of them was using the cloud to provide a new experience. Today, however, that has all changed significantly. Financial sector players now are rolling out services in the cloud, are rolling out services with third party, are buying software as a service, are buying new products. And what is happening is the risk factor has grown significantly. What needs to now be secured is more. It's all over the place, and it's now creating a new risk factor for organizations. This risk has grown significantly and continues to do so on year as organizations roll out new products, new services, and new technology to keep the customer engaged and keep the customer's money and keep the customer's money growing. So how can banks mitigate cyber risk? Banks are now looking at not just banks, but banks, SACCOs, microfinances, and anyone in the financial services industry are looking at how to secure the digital attack surface. Work from home, work from on-prem, work from the coffee shop, customers connecting to your platforms in the cloud, platforms owned by third party. All these new surfaces need to be secured. These are now new attack surfaces. Cyber criminals. They are constantly looking at how they can get in using any of those entry points. Sophisticated threats emerging every day. We've now gone from WannaCry to COVID-19 to SolarWinds and the latest Microsoft breaches. It never stops. It's an every morning you have a breaking news around cybersecurity. Some new threat type has become available out there. Every FSI player is looking at adopting an intelligent security architecture. How does this architecture help me see what's running on my environment, see what's going on, and be able to stop all these new threats? And most importantly, how do we meet compliance across? So Fortinet does that for you. Fortinet launched what we call the Fortinet Security Fabric. With over 50 security products, with one of the broadest portfolios in the market, we are able to integrate all these 50 solutions into one security fabric that's able to give you threat intelligence, deep visibility, and most importantly, high level of automation across the fabric and across your entire enterprise, securing how you lock down and secure your environment. The pillars that build up the fabric include the zero trust network access, security-driven networking, dynamic cloud, and most importantly, our new portfolio, AI-driven security operations. So with our security fabric, we're able to help banks be consistent with their security policy and enforcement across the environment. We're able to give you deep end-to-end visibility. We're able to tell you what apps are running in what apps. We're able to tell you what's in transit across your entire environment. And most importantly, we're able to help you automate all the security responses you need to ensure that you have a secure environment. As the banking sector becomes digital, how do we help you move to the cloud? Cloud has now become a big discussion. To ensure that you have a complete and seamless customer experience, the FSI players are opting to use the cloud to achieve this. Mobile banking platforms, web banking platforms, customer experience sites, call centers, all of that is moving up to the cloud. And as this happens, customers are faced with a new challenge. How do you secure the cloud and how do you remain agile? And Fortinet delivers a solution that's able to provide private cloud security, public cloud security, and software as a service security. So we're able to secure the FSI journey up to the cloud and ensure that you can continue to deliver an experience without compromising security. The bank is now becoming an enterprise. Increasing mobile workforce. Everyone now is either working from home or working off-site, and now you have banking employees coming to see you to sell you new products and services. The WAN edge is now changing. It's being replaced from MPLS to SD-WAN, and there's a new need for secure infrastructure across end-to-end from the branch to the HQ all the way to the cloud. Now that we don't know where everyone is, we have no idea what's happening with their mobile devices, phones, laptops, tablets. network access control is becoming a key discussion with the financial sector players. With an end-to-end portfolio, we're able to ensure that we are able to secure your network and provide you a seamless layer that goes all the way from on-prem to remote work to cloud. COVID-19 accelerated the need for work from home, and Fortinet has a complete solution to ensure that it is really Imran connecting from home and not someone else. With a teleworker solution that already is pre-built into most of our technologies, it's just a matter of turning on these features and you have a full end-to-end work from anywhere. These days, I like to call it work from X, because you're not sure anymore if you're working from home, you're working from the car, or you're working from the cafe. The other day, I was surprised to see a couple of guys sitting in a car on a conference call. And I asked them what's going on. And they said, well, the kids are in the house. They can't work from indoors. So they're now working from the car. And I thought to myself, this is interesting. Work from X. AI is now becoming very critical for the FSI players. Everyone wants to know the ability of AI to come in and help the financial sector players secure their environment. AI is now being built into all of Fortinet's 50 products and the fabric, and its ability to, first of all, identify, analyze, and quarantine threat is an all-time high. Its ability to constantly profile traffic, users, and behavior on the environment is helping the security teams be able to identify what is happening, where these threats are originating from, and what needs to be done to mitigate these threats from spreading out. So Fortinet is helping the financial sector space to accelerate their digital journey, to be able to provide a secure end-to-end platform for both the bank or the financial player itself and its customers. And we help you reduce your cyber risk, cyber compliance, and be able to deliver that innovative story that you're looking for to your customers today. This brings me to the end of the session. It's been a pleasure to present to you once again. I am available for any Q&A session. I will be sharing my contacts with you in the course of the day. Feel free to reach out to me, and I look forward to hearing from you. Thank you.
I've known you from the very beginning. Watched as you started exploring the world. When you first felt that feeling of wonder, I was there when you went from growing your knowledge to sharing it with the world. I was there to make sure you were safe. When you found your forever love and looked on as life drew full circle. I've been there all along, and I always will be.
Thank you, Imran. It is clear that as we innovate and onboard millions of users across our different products and services, we also increase the surface area for compromise, infiltration, and attack. We must therefore be intentional about creating and operating in secure environments. Our summit partner Fortinet can help you with this. Laura spoke about RegTech in her opening remarks, and to help us unpack part of this and to drive the conversation on the role of regulation in catalyzing the growth of FSIs, we have Munyi Nthiga, a fintech expert with a solid combination of being a Pan-Africanist with a passion for digital payments and product development. Munyi has a passion for solving payments fragmentation that is witnessed in Africa. Over the years, he has invested time in creating a network and knowledge base that allows his teams to create products that solve for the most pressing needs in the nascent African digital economy. Specifically, Munyi likes to focus on solving the challenges that exist in multiple markets, focusing on digital platforms, financial inclusion, and product development. Munyi is a fintech expert with over 13 years experience in the IT space in Africa, 8 of which have been in the digital payment space, operating across 11 markets in Africa and engaging over 16 markets. Over to you, Munyi.
Thank you, Mbogwa. Welcome to the first panel for today. We've got an interesting conversation coming up where we will be talking about the role of regulation in catalyzing the growth of financial services industry. We will also delve into how much the landscape has changed in the financial technology space, and how financial technology has helped business and the general public to navigate through these difficult times. Towards the end, we'll also look at how financial technology is playing a role in growing businesses and the opportunities that we see post-pandemic. Today, we've got an interesting panel. 4 gentlemen that have got experience across digital payments, digital lending, the technology space. We also have a panelist that's in legal and the regulatory area. And now I'm joined by Paul Ndishu, who is the CEO of Wapi Capital. Paul. Brian Kalule, who's a partner at Bowman's. Brian, karibu. Kevin Mutiso, who runs Alternative Circle, but as well as the chairman of DLAC, Digital Lenders Association of Kenya. Kevin. And Jogona George, CIO Safaricom. Karibu, George. So we will start off with Paul. Kindly introduce yourself and what Wapi does, and we can take it up from there.
Thanks, Munyi. So I hope everyone can hear me clearly.
Yes,
thanks
we
for
can.
having us as the first panel. First, let me start by congratulating you on setting up Association of Fintech Kenya together with the rest of the team. Much due, it's much due in course. It was needed, and I look forward to engaging and also being part of it. I think Wapi, I'm the CEO co-founder of Wapi. We're incorporated out of Kenya and Singapore. We focus on the Africa and the Asia continent, on the flow of funds in terms of moving the payments specifically for trade. We incorporated it about 3 years ago together with my co-founder, my twin brother. And yeah, we're really seeing fundamental gaps in how people transact between Africa and Asia. Thank you for having me.
Interesting that you bring in the issue of remittances, and that is one of the challenges that we face in Africa. Remittances in terms of paying for goods and services or receiving payments. How do you see financial technology solving this problem to ease trade, either cross-continent or cross intra-Africa trade?
Great question. So if you look at trade globally, last year, particularly in the pandemic period, it increased by about 30% globally. In Kenya alone, our imports increased by about 25%. Our exports did not increase significantly, by just about 5%. But what this in totality means is trade has increased. And if you look at the areas that we focus on, so the Africa and the Southeast Asia corridor, you've got 54 currencies here, you've got another 25 odd currencies. How does the flow of funds actually happen for people to transact with each other? I think Africa, we're not a manufacturing continent. Largely, I think over the next 10 years, we're going to be importing a lot of things out of Asia. Africa alone sends out about $200 billion into Southeast Asia, and these are for imports. So if you think about, Margaret, she's a head teacher. She owns a bike shop with spare parts in Nyamakima. How does she actually connect with a supplier and be able to pay? And if you look at what has happened post-pandemic, people can't travel to Asia to buy goods and services. So you have to interact online. You have to transact online. Currently, the rails are antiquated, so it takes 4 to 5 days to actually move funds. And you're talking about not just the small, also talking about large corporates who do 1,000, 2,000 payments into Asia. So specifically, financial technology has now brought an opportunity to allow movement of funds between these two corridors, particularly for trade. And more importantly, if you look at Wapi itself, what we've been able to do over the last year, we've paid about 5,000 suppliers out of Asia. So outside just the transaction, you're capturing specific data about suppliers that is much needed. And this has only been possible through technology and financial technology to be specific.
Paul, quite informative there. Kevin, you head the Digital Lenders Association of Kenya. Kindly introduce yourself and tell us what is DLAC about and how is it playing within the larger financial technology space in Kenya? Kevin, you're on mute. If you kindly switch on your...
Sorry about that. Good morning, everyone. Thank you for having me. I'm very excited to be talking about fintech with luminaries like George and Paul. It's good to see you guys, as always. DLAC was founded in 2018, and the core objective was to basically lobby for progressive regulation in Kenya. I think we've all seen the negative press and the negative connotations that digital lending is getting publicly. And what we were trying to do is we were trying to solve one, the perception, and then two, of course, the regulation. We think digital lending can play a very pivotal role in the economic recovery, particularly now during this COVID pandemic when the micro SME and the informal sector entrepreneur has been adversely affected. I love the fact that Paul, has talked about numbers. Numbers are things I like. So right now, they say you've got about 2.2 million MSMEs in Kenya alone. And I think about 70% are not getting the financial services they require, the relevant financial services they require. Now, with the right regulation, with the right frameworks in place, the speaker before talked about open banking, for example, we can use things like digital lending to catalyze these MSMEs, provide the relevant digital financial services, and help them grow their businesses, and in turn, grow the economy. So that's the main purview of DLAC. Right now, we have the CBK Amendment Bill 2021 that's currently being debated in Parliament. It has just passed through its first reading. We're about to go to public participation. DLAC, because we were prepared, we're engaging with all the relevant authorities, so everyone that is a stakeholder, be it a government regulator or the donor-funded organizations or the bodies that sort of help design policy, such as KIPRA, and we're engaging with them in a very deep way, and we're trying to get the right and progressive regulation for the industry. Thank you very much.
Interesting, Kevin, you talk about the MSME and the SME space. And right now we're talking about the financing gap. In Kenya, we're talking about close to $9 billion in terms of financing gap in the MSME and SME space. So specifically, speak to how digital lending can actually be able to help us close this gap.
Digital lending is a channel, and the governor of the central bank has made this very clear. Digital is just a channel. I think what we need to solve for, and what will help the MSME, is one, solving for fraud. Fraud is a major expense for digital lending or lending in general. If we're able to solve for that so that we can reduce the cost of managing fraud, that means we can lend to more MSMEs. We need to aggregate their data. A lot of data is sitting in silos. Some of it is still in non-digital forms. If we could aggregate some of that data and see that data more clearly, we could potentially give these MSMEs more relevant loans. And what do I mean by more relevant? Right now, most of digital lending products are 30-day loans, 1-day loans, 7-day loans. What if we had a loan that was in the value chain? And the speaker before spoke about blockchain, smart contracts, where, once the good is received, we can, release the payment, etc. And in that, there was some financing. And of course, we make some money and the entrepreneur also makes some money. And then the final thing is that, ability to repay. If we're able to create opportunities for these entrepreneurs with our capital to demonstrate that today we have given you 10,000, but tomorrow if we gave you 100, you would do much bigger business. And so digital lending can play that pivotal role, from moving an MSME, an informal sector entrepreneur who could only absorb, say, 5,000, 10,000 shillings, to grow their business, to start absorbing larger amounts of capital. And I think the number you gave, 9 billion, I remember in 2018, the number was 20 billion. I don't think we've covered 11 billion. So I still think the financing gap is much larger than that 9 billion number.
Brian Kalule from Uganda. Omugamba Chisebo.
JND.
How is Kampala?
Kampala is very
You're
good.
muted, we can't hear you. You well?
Oh, sorry.
Now we can hear you, I think. You're muted again. Okay, probably as you addressed that, we could connect with George. Probably John Jogona does not need much introduction, but I'll let him speak for himself. So, George, we're looking at how financial technology has helped us go through this pandemic. In your view, in your experience, in your practice, how do you think financial technology has helped us go through these challenges that we're experiencing at this time?
Good morning, Munya. I thought you'd also call me Sebo, but I'll let that slide. Pleasure to be here with great minds and always willing to learn. And it's good Paul has his label under him. I would call him Eddie. But anyway, just going to the question. I think COVID, I think, was a wake-up call for everyone. Everybody says the way COVID accelerated digital transformation. I think we got to see it every day, from our own customers that we deal with to the enterprises that provide services to other customers. And I think the biggest thing was, we play in three major spaces, and I'm part of all of them. There's the connectivity piece, the financial services piece, and digital services. And on the connectivity piece, I mean, you can't talk about fintech or financial technology without connectivity. So being able to get a connection in any part of the country and the region becomes extremely important for anybody to do it. The second piece is on our financial services. I think more and more, because of zero touch and a number of the regulations, we started moving away from cash and focusing more to digital payments. So that meant a lot more transactions. One of the actions our government took was to zero rate transactions below 1,000 shillings, $10, which meant a lot more volume going through, but also interesting peaks because of the lockdown hours. Our traditional peaks that perhaps were at X time during the day, you would then see peaks at an alternative time. So a lot more strain was happening through the non-lockdown hours. And so really ensuring that our platforms are able to cope with this demand expanding. Another interesting thing was to see the impact on Fuliza. I think we've done about 2 Fuliza upgrades, and we're doing another one just during, I think, driven largely by COVID, but also I think it's a great financial services product. On the digital services side, a lot of our customers were asking us for support in building apps, be it in financial services or in insurance or health sectors. And so a lot of these then stick true to people being able to get self-care, being able to view the products that are available, but also being able to make payments. So I think the platform piece and accessibility becomes extremely important. So as a company, our purpose is transforming lives. And what I see the role we're playing is really ensuring that we have the platforms in place, they're stable, they're available, they're advanced enough to meet the demands of the new age customer, but also to help us bridge that digital divide. I mean, right now, big initiative on our device financing proposition is to move our smartphone penetration to double it, more than double it, grow it by 60 to 80%, because unless people are on smart devices, anything like, again, we talk about fintech, about bridging the digital divide, about accessibility, is really pinged on those three. I always explain it this way, Muni. I think the network we lay is the rails. I know Paul spoke about rails, and we can delve into that. But from a network perspective, the network is the rails. Then the devices, I believe, are the carts on the rails. So you can have the best rails in the country, but if people can't get on it, they don't have the carts to get on it, then they don't have access to that great rail network. Then the passengers and everything within the cart are the digital services. And so we need to ensure that, and right now a big push is to get more carts on the rails, but then also to ensure that we are enabling and making it easier for people to get on the carts with their services and products. Yeah. Thanks, Buni.
Thank you, George. We'll get back to you on the role of fintech, and this is now forward-looking and how we can leverage financial technology to solve some of the challenges that we look facing us in the future. But back to you, Brian. I've had the benefit of working in Uganda for close to 5 years and sort of seen the challenges that that market is facing, quite similar to what is happening here in Kenya. But from you, from a legal perspective, how do you see the interplay between regulation, policy, and financial technology from your experience? You're muted, Brian. You're muted, Brian. Unmute. Yeah, it's still on mute. Yeah, Brian, you're still on mute. Okay, Brian, probably try and drop off and then come back again. Yeah, post-pandemic, you're looking at a situation where we want to leverage on technology to sort of increase the velocity of money, support businesses. So, Paul, coming back to you, how do you see us moving forward? I don't like to use the word post-pandemic because, I mean, it's here with us. It's going to be with us for a long time. But the challenges still remain. The lockdown in terms of movement of labor, working from home, organizations trying to reach their customers via digital channels. How do you see financial technology playing a role in terms of catalyzing growth, both in the financial services industry and in general, in terms of sort of jumpstarting our economy?
Yeah, great question, Muni. Thanks. I think you're right. There is no post-pandemic. This is going to be with us for the rest, for many years to come. I think financial technology specifically has created an opportunity where, as Laura mentioned, you have inclusion, you have people who can access services and solutions for them to enable themselves to trade. I think, listening to Kevin talking about the MSMEs, 2 million plus, a lot of these people are entrepreneurs, they're traders. And as I mentioned before, if you look at, for Kenya specifically, if you look at the imports that happen, it's about $7 to $8 billion every year. How do these people actually interact? Like, how do they, we've been on the ground and talked to a lot of them, and you'll find all of them are, on chat groups, on different WeChat sessions, and they're talking to their suppliers. And, the only thing I think right now, even for us at WAPI, is focusing on how do you allow them to communicate with each other, one. Two, how do you give them a solution that allows them not just to identify the goods they want, and it could be as simple as, things like chargers, phone chargers, plastics in Yamakomba clothes, whatever it is. How do you get them to access these services? Because all they do is take pictures. But at the end of the day, they have to transact with each other. So financial technology comes to play this fundamental role of how they interact and transact with each other. Over and above that, I think Kevin also mentioned about the trade and the lending opportunity. We see an opportunity for financial technology to extend solutions such as trade finance. If you've got that guy who's got 1,000 charges that he's selling, if you gave him an opportunity or trade finance access, can he get 5,000 charges? Can he open up 2 or 3 more shops? All this is done through financial technology. Over and above that, I think we're seeing, even with the suppliers we're paying, not just for corporate, but for SMEs in Asia and fundamentally China, they're asking for things outside of payment. They're asking for things, like I said, trade finance, but even things like insurance, cargo insurance, and all the way to logistics. I think the first step of addressing what their key need is transacting with their supplier. Second thing is, how do you extend other financial services such as insurance, trade finance, or even custody solutions that they can be able to use and transact with their suppliers. All this is financial technology. And then it's nicely covered up at the end of it with logistics. And I see, financial technology being the key driver for allowing trade, specifically trade between Africa and the world. And you can see this clearly with a lot of the fintechs that are, all the way from West Africa to Southern Africa, that are exploding, not just from a funding perspective, but also, trying to build and fix the solution. I think we are only about 10, 15, maybe 20%. I think there's a huge opportunity to address that gap. It's still an 80% plus gap. And I think financial technology will play a key role in this.
Let's loop in back, Brian. You can hear me, Brian?
Can you hear me?
Yes, I can. Yes, I can. Okay, let's kick off. We've talked about innovation preceding policy. But right now, we're talking about innovation influencing policy. How do you see the interplay between regulation, policy, and financial technology? Because you're looking at how does financial technology help us transform markets, spur businesses, re-energize the economy. How do you see regulation, policy on one side, and on the other side, financial technology, the interplay in between? You've seen a lot of conversations around bills coming up in parliament, policy changing. People have talked about being regulated out of business. What's your view around regulation and policy vis-a-vis the financial technology space?
Thanks, Muni. I hope you can hear me well. I'm
yes,
happy
I can.
to be here. My name is Brian Kaule. I'm a lawyer, and it's very evident that I don't know very much about technology. But I'm a lawyer in Bowmans, Uganda. Bowmans is a Pan-African law firm with offices in Kenya, Uganda, Tanzania, South Africa, Malawi, Zambia, Mauritius, and Ethiopia. As Muni says, I'm here to speak about regulation. And I should emphasize that actually regulation is very important for the growth of the fintech market. It helps prevent market failure. It helps bring market transparency. It protects consumers. It promotes microeconomic stability. It protects investors, and it mitigates the effects of financial failures on the economy. So regulation, fintech regulation, is a very good thing. What we've seen so far is regulators have adopted a wait-and-see approach towards fintech. I remember when mobile money first came around 2006, 2007, there was a lot of uncertainty as whether it was regulated and where it fell, if it was so. So we didn't see anything until about 3, 4, 5 years ago, when national payments laws were introduced in Uganda, in Kenya, and in Tanzania. So that uncertainty wasn't very good for the industry. Of course, on one hand, one can say that that lack of regulation enabled innovation in a way, because people could innovate without having regulations to look over their heads. But on the other hand, that uncertainty discouraged investors because nobody wanted to put money in an industry whose future they weren't very certain of. So to answer, and I get the theme of the day is innovation, and to answer your question whether regulation is pro-innovation, what I've seen, I can say briefly, is that yes, it is largely pro-innovation. When you look at Kenya and in Uganda, there are laws that put in place regulatory sandboxes for fintechs. So these sandboxes allow entities with innovative financial products to test them out on the market without the need for licensing, of course, under the supervision of the regulator. So for me, nothing beats pro-innovation than the fact that they can recognize that people can be allowed to test products on the market without licensing. So then the second indicator of pro-innovation is the fact that regulators recognize that fintech is a subject of its own. It's a sector of its own that needs its own regulation. I mean, it would have been easier for regulators to just lump it up together with other financial services and say everybody who wants to partake in fintechs should get a financial institution's license. But they didn't do that. And for me, that's a recognition that they are pro-innovation. But largely, whether regulation will be pro-innovative will really depend on how regulators interpret the laws vis-a-vis the developing tech and circumstances. As you know, fintech is very, very dynamic. Technologies come up, products come up. So how regulators fit in these new products into existing regulations will determine ultimately whether it's pro-innovative or not. So well, those are so many words, but I hope I've made the point. Thank you very
And
much.
we got you clearly. And sticking back with regulation, Kevin, you're in the middle of this as a techpreneur on one side, on the other side as a chair of DLAC, an organization or an association that is interacting with the different stakeholders within the financial services space. So how do you see this interplay? Is regulation a stifler? Can it be an enabler for innovation? How are you addressing this, both as a techpreneur and as a leader in DLAC, by engaging the stakeholders and having this conversation on a day-to-day basis?
Thanks for that question. When Paul was talking, he spoke about Singapore, and I think I think Paul also went to Singapore for the Fintech Festival, and I did as well in 2017. And I think one of the things that we both agreed was that, the regulatory framework there is enabling fintechs to come up with solutions that create value for both the customer and the economy. So can regulation be an enabler? Yes, and this is how. Now, regulation should be perceived like a rule book. And in games like digital lending, we have to be very careful to ensure that the baseline is safe for the consumer.
We've lost you. We've lost you, Kevin.
Can you hear me? Can you hear me?
Yes, we can. Kindly proceed.
Sorry about. So I was saying regulation is an enabler when it what was I saying? Yeah. So regulation is is the way that you should perceive regulation is as a rule book, and in games like digital lending where you can have nefarious actors, we need to create a situation where we protect the customer, we ensure the business is able to generate profit, so sustainable business, and then adds value to the economy. And those are the three sort of things we should look at when we're looking at regulation. Now, when I mean what's the baseline, one should ensure that the customer is sort of always at the center of decision making when it comes to what can harm them with our products. So in lending, for example, one of the key things we need to make sure is that pricing, pricing is a complaint we get all the time. Does the customer understand what the price means? Do they understand the consequence of that, of taking that loan? In places like South Africa, a contract is deemed null and void if the customer can prove that the contract that they were given to consent to was in a language they did not understand, right? Why is things like that important? Because there are certain customers who are desperate for the money, for example, who will do anything to get that money to live, to eat, but is that the right person to get that money at that time? Are we over indebting them? So problems like that are what regulation solves. Now, when we talk about stifling, the
Can you hear me, Kevin?
notion is that.
Yes, can you hear me, Kevin? Sorry to cut you short. We're really running out of time, and we've got one area that we need to cover very quickly. I'll move to George. We've seen products, cross-border products like Safaricom being able, M-Pesa customers being able to send money to MTN Money in Uganda and vice versa. So my question to you is, are we ready for example, cross-border licensing? Do you think we need a unified regulatory framework to support, for example, businesses across East Africa? And for example, can we dream of, for example, an East African innovation passport that allows us to move technology, ideas, and businesses across the market? Quickly, you've got 30 seconds. Give us your thoughts around that.
Thanks, Bonye. I mean, Paul spoke about the problem of doing transactions into Asia and vice versa. I think it's a problem even in the region with all the solutions. You talk to people who do business across. I think the mobile money operators with some banks have helped to bridge the gap. But I do believe we need to look at it. And I mean, I've become more accustomed to watch some of the sessions that are set up, be it IGAD, East Africa community, because I believe then we need to lobby and engage at that. Now, what are the key concerns? I think a lot of them come from the what you'd call the old rails and an old way of thinking and doing things. But we need to then provide guidance and technology solutions that address the concerns and give the regulators and any other policy makers the confidence to be able to enable this. Some of them have to do with foreign currency levels and how that's being managed. Some of them, it's about supply and demand, taxation. There's a myriad of reasons. But how can we then provide these solutions? I think we can't only look to the regulators and the policy makers to do it. We need to play an influencing role by engaging. I think people want people who are building solutions, developing products, be it software, hardware, or goods and services.
All right, thank you.
Would like our China is here, and we need to be able to.
Thank you, George. Sorry, gentlemen, we've run out of time. Interesting conversation. The conversation must go on. I believe we are still live on the link. We can be able to interact with whoever is watching online. We can be able to ask further questions. But gentlemen, thank you. The conversation must go on, and let's continue engaging. Thank you.
Thanks for having us, Muni.
Thank you, everyone, for tuning in. Thank you for watching. You can always log in and share your questions, your views, your comments. The panelists are still available. They should be able to respond to some of the concerns that you may have. And we thank you for joining us today. And let's keep the conversation going.
Great insights from that panel, Muni. There's always more to learn. To the attendees, make sure that you leverage the networking platform to connect and keep asking pertinent questions, making the right connections to try drive your businesses up. I'd also like to thank all our panelists: Paul, CEO of Wapi Capital, Brian, partner at Bowman's, Kevin from the Digital Mobile Lenders Association, and George, CIO at Safaricom. Wrapping up our leadership segment, we go to Uganda with Dr. Haruna Mawanda, who sits at the helm of steering the innovation in Uganda's fintech ecosystem. Dr. Haruna is currently an executive enterprise architect consultant at Stanbic Bank and also the CEO at FlyHub, a Stanbic Group fintech. Prior to this, he also served as VP Enterprise Architecture at Wells Fargo Bank, the third largest bank in the United States of America, and as a senior consultant at Accenture and Deloitte. He's also a founder of School Africa and Health Class EduTech platform, and SACCOX, a community platform for SACCOs extending services to the underserved and unbanked. With him, we explore new leadership styles, business innovation strategies, and models to ace upcoming innovation. Let's go.
Hello, my name is Haruna Mawanda, and I'm the CEO of FlyHub Fintech, which is a Stanbic Fintech. And I'm excited to be here with you. Looking forward to presenting leadership that is disruptive leadership in FSI. So I will get started on this presentation. We'll try to keep it short for time. And hopefully at the end of it all, we will all know what disruptive leadership is for us. I'll start off here by actually introducing what has been the key terms in the phrase that I'm talking about. If you think about disrupt and you think about leadership, you could even add management, you realize that up until now, those terms were congruent in the previous scholarships or scholars when they published. In this day of digital transformation, in this era where the customer is at the center, where everything is changing, nothing is certain, where we have a new normal, disruption has become the new normal in our lives. and it has actually become the new normal for businesses or organizations. And furthermore, it has become the new normal for leaders. And so when you look at disruptive leadership, we've had so many types of leadership before, where we've looked at transactional leadership, servant leadership, transformational leadership. But what was missing in all those leadership traits was the ability to respond in real time, the ability to co-create, the ability to have that vision ahead of time, shaking up the normal. And within FSI, which is the most highly regulated industry in Africa, one would then say, we have for years proceeded with caution. Leaders have proceeded with caution. But in the light of transformation or digital transformation, leaders need to start being very proactive in how they do things, how they view the world, how they treat their teams, and how they actually articulate their vision. So what is disruptive leadership? And you could actually start off just looking at the definition that is on your screen. But I would want to maybe articulate this a little bit differently, and by stating that disruptive leadership is more of a mindset. So you actually talk about disruptive mindset, disruptive thinking. Those are key tenets when we talk about disruptive leadership. So when we talk about this term, right, it is leadership that is always seeking to develop a competitive advantage. That is a fundamental why, right? And when you actually dig deeper, right, it is, we can associate it with changing the way people think or the way things are done. It is leadership really that focuses less on what the organization is currently doing and more on what it can become. And then when you transition next into who is a disruptive leader, you can actually come up with someone who is always continuously looking for better solutions and ways to establish processes and wants to make an impact on the business as a whole. And they do this without worrying about shaking up things or altering the paths to obtain the necessary results. These are leaders that drive organizations to adapt, to collaborate, to excel in disruptive times, because we are living in disruptive times. If you again look at the pandemic and the impact it had on several businesses, especially in financial services, high-performing leaders were leaders that were, had the vision and ability to incorporate and build existing concepts of agility, digital, and inclusive leadership, bringing everyone together to develop that competitive advantage. That is when we talk about disruptive leadership, right? In FSI, and I'm specifically speaking in the financial services industry, where we are regulated, security is on top of our minds. And so is keeping the lights on. So the always on, always secure concept is where we spend the bulk of our time. So you'll find a lot of leaders strategizing around the defensive strategy, less on the offensive strategy. If they do, it is going to be incremental. So when we now start talking about how do we organize ourselves within financial services, or how do we disrupt ourselves, how we organize ourselves is very critical. So if you look at this diagram here that I present on the screen, you will see 4 boxes. And what you're going to notice about these boxes is that to the left, you have incremental innovation, right? And above it all, you will have architecture innovation. When you look to the right, you'll have disruptive innovation and radical innovation. What you see more with disruptive leaders, they operate in the 2 boxes to your right. And what does that mean? They are continuously looking at new markets using new technologies, or using new technologies to look at or enter new markets. And that is what you then refer to as your radical innovation. It requires that disruptive mindset and thinking, right? And ability to take chances when you want to operate in that zone of radical innovation. The same is true for disruptive zone, where you actually have leaders that are willing to look at new technologies, but in existing markets. So when we look at all this, you'll find that a lot of time in today's financial services is spent on the boxes to the left where you're playing it safe. This is where we have a lot of broken issues, or we have problems, and we spend time and again fixing those. The bright areas of the future, financial services, or our future, or the industry and innovation, are seemingly the unbroken parts that we spend time on, where nothing appears to go wrong. And the whole point of disruptive leadership and thinking is paying attention to things that often are ignored and not obvious. That whole point is directing other people's attention to those things that at the moment, or in light of what is happening, might not seem important or significant. That is disruptive leadership and thinking. So with that said, then we transition our presentation then to a slide that talks about the key qualities of disruptive leadership. What are those qualities that matter? And when you look at it here, it's about knowing self, right? You need to know yourself. You need to lead with confidence and humility. If you're confident, right, a lot of your followers or your team members will follow you. Now, once you do that, then you need to lead yourself, right? And this requires leading with action and reflection, being able to continuously look back and take in and reflect on your learnings, what you've done and what you can change. That is how we can actually progress or improve. You know, we need to be able to lead the team, and that is lead through results, lead through behaviors, lead data, drive our decision making. Then leading the business. Disruptive leaders need to lead the business. They lead through strengthening the core and then guiding the team to the future. That is a very, very powerful tenet of disruptive leadership. And above it all, you don't have to be focused on just your organization. It is leading the industry. You want to be pioneers. You want to be first movers in this case. So lead us all. So it's for us and all. So those are some of the key qualities that we talk about when we are referring to disruptive leadership. Now, I'll take some time and speak to what I would say, what are some of the key traits of disruptive leaders within financial services. And these are items I could probably list about 8 or 10, and for the sake of time, I'll try to keep them short. But the first one is commitment to lifelong learning. Learn, unlearning, and relearning. That is a key trait because things are continuously changing. What you knew yesterday at times won't get you or move you forward. And second, when you look at what we call the game strategy, they are not playing to win, right? They are not playing to stay in the game. They are playing to change the game. So disruptive leaders are always playing to change the game. That's another key trait. And then number 3, if we look at this, is it's all about breaking good for great. Not being afraid to give up good, for what is great. So you don't settle for it ain't broken, we ain't touching it, right? You're willing to take a chance. And within financial services, it is about delivering financial institutions of the future, ones that are engage the customer, ones that understand, ones that personalize, and ones that advise the customers. It is that continuous engagement and co-creation that disruptive leaders embark on. And if you look about not giving up, if there's one phrase, a Japanese phrase that can conclude their stamina and resilience, is fall 7 times, stand up 8. That is a trait that they actually always have. You know, when you look at what Martin Luther King talked about, leaders, right? Good leaders. And in this case, it actually applies to disruptive leaders because they're always finding new ways, experimenting. If they can't fly, they run. If they can't run, they walk. If they can't walk, they crawl, right? And if they can't crawl, whatever it is, they have to keep on moving and moving forward. And that speaks a lot about, someone's persona and mindset. Then we talk about decisiveness, right? As a leader, you have to be a disruptive leader, you have to be decisive, right? They know without hesitation when it's time to start pushing the load, they cannot carry themselves, right? And again, when you talk about decisive leaders, right, you go back to focus groups. A lot of times you have focus groups in organizations where you have a democracy and you vote and then decide on what to do next. But there are certain times where leading by consensus has its place in the business world, but you cannot focus group your way to an effective playbook when you're talking about an ever-changing and rapidly changing landscape. So decisiveness in how we make decisions is very important, okay? They also see disruption as an opportunity and embrace the change it brings, right? Sometimes you look in financial services, for example, banks, they look at fintechs coming in. There are those leaders that look at fintechs as rivals, as threats. There are those that look at MNOs as rivals, as threats. But a true disruptive leader is going to always look for partnerships, right? When they see the impact or experience the impact or the disruption coming from competition, they look at it as an opportunity, right? And embrace the change that comes with it and then decide, how do we seize that opportunity? And these same leaders will be the same leaders that relentlessly pursue the truth, always checking, testing to make sure that their company's strategies, right, are still effective. And they say so when they are not. So you don't, even if you are the originator of some vision or idea, when it's not working, or if it's not working, know when to actually change course or course correct, okay? That is a fundamental trait of a disruptive leader, right? They should be able to guide others through chaos, okay? Not only do they guide an organization through a familiar course during difficult times, but keep the ship steady as it steers into new grounds, new territory. That is what disruptive leaders do, right? When you talk about integrating change into the company's operating fabric, innovation, disruption, if you look about the principles around fail fast, fail forward, right? Rewarding experimentation, those are all key tenets of a good leader in this era of disruption, okay? And then the other part that is very important, and you always find in a lot of literature, is around uncertainty, right? Getting used to incredible levels of uncertainty. One can actually come in and say, you can try it one time, two times, but if it's part of your strategy and your day-to-day job description, it takes someone with a lot of stamina, with a lot of zeal, and it takes someone with a lot of that disruptive thinking and mindset to withstand the pressures that come with uncertainty. And through methodologies like design thinking, they are able to actually modify their assumptions and adapt their plans depending on their results to continuously deliver prototypes that meet the customer expectations. And if I summarize all this, leaders have things they know about that keep them up all night, and some stay awake, concerned about what they don't know. Disruptive leaders, in most cases, you will see them staying up at night, concerned about what they don't know. In summary, as I come to the conclusion of this, right, I ask myself, am I a disruptive leader? Am I working with or working for someone with that disruptive leadership mindset and thinking? Are you, looking in the period of disruption where you're disrupting or being disrupted? Are you a visionary? Are you a pioneer that's driving change? So that, I think, at a very, very high level, speaks to what I wanted to say to the team or share with the team. This has been a very short presentation, but the next presentation will cover two key topics. How do you lead through disruption as one? And number two, how do we measure and reward disruptive performance? Thank you.
The traditional network perimeter is now open, allowing applications and data to move freely across multiple network edges to meet evolving business demands. As new edges emerge and attack surfaces rapidly expand, traditional security solutions have been unable to keep up. Rather than addressing the distributed network as a single environment, they can only focus on protecting one segment of the network at a time. The Fortinet vision for security is different. It begins with the Fortinet Security Fabric, powered by a single operating system, FortiOS. This platform is built on 3 pillars that provide broad visibility and comprehensive protection across the entire digital attack surface. Zero Trust Access, ensuring controlled access to any resource from any device. Security-driven networking, enabling digital innovation by blending security with the network. Adaptive cloud security, providing consistent, cloud-native security across a multi-cloud environment. The entire Fortinet Security Fabric is integrated to reduce complexity and share threat intelligence. FortiGuard gathers critical threat intelligence, which is then analyzed by our patented AI-based threat analysis system and continuously shared across the entire security fabric. To help organizations more effectively leverage their existing security investments, Fabric connectors and APIs create an open ecosystem so existing solutions can be easily connected into the security fabric. A single Fabric Management Center provides centralized control of every Fabric element. It ensures that everything is integrated and communicating, orchestrates policies, correlates and shares threat intelligence, and automatically enables a coordinated response to detected security events. All of this driven by automated, self-healing networks with AI-driven security for fast and efficient operations. The result is the first fully integrated endpoint, network, and cloud platform. Augmented with the industry's most advanced security AI, the Fortinet Security Fabric platform enables fully automated, self-healing network security.
Thank you for staying on the CIO Fintech Summit and to our sponsors for enabling us. We are now moving into the technology segment of the summit, having just closed on the leadership series. To get us started is Suman Sasmal, head coach of OpenXO. Suman is driven by passion and powered by purpose of no individual left behind. He has a rich career in the global IT space where he served companies such as Infosys for many years. He has worked across 4 continents, played multiple roles, and was running a $1 billion global delivery organization at Infosys and head of its iconic development center at Bangalore, India. Suman has spent part of his growing years in Zambia and is well traveled in Africa, and also having offered a public lecture at the University of Nairobi in 2019. Suman will break down for us why OpenXO is key to fintech success. Over to you, Suman.
Good morning, everybody. It's such a pleasure for me to be with you. I'm in Bangalore in India, and pleasure to be talking to you, and many of you are in East of Africa. Great. So what I'm going to do today is give you some tips about how to really make your ventures, make your organization exponential. Because what I feel is, Fin and tech, they are like 2 soulmates. And when you superpower this soulmate with the framework and the process of OpenEXO, what is ahead is 10x for all of you guys in East Africa. So let the next decade be dedicated to the 10x process of East Africa, right? And that's what is going to be the theme of this talk. So when you look at, as everybody says, technologies don't change the world, but business model does. I would go one step ahead and I would say not even business model, it's exponential business model. So when you have exponential technology, something that you are very familiar with, On top of that, you add exponential attributes and novel business models, which you will see shortly. You give birth to exponential organizations or EXOs. Now, what are EXOs? These are organizations which are growing 5x to 10x, pretty much as compared to its industry peers and so on. So how do we frame an EXO? How do we construct the EXO process? So there are multiple frames. Let's look at some of them, given the limited time that we have. The first frame is about look for abundance brewing in your domain, not just your domain, your adjacent spaces, even other industries, because you don't know where the opportunities will pretty much come from. And when you look at some of these technologies, which you are, I'm sure, very familiar with, whether it is artificial intelligence or nanotechnologies or material science or genetics or neuroscience, each one of them over the last few years have been doubling in their price performance at a time interval of anywhere between 8 months to 24 months, which means today they have pretty much the potential. How information technology changed the way we work and live in the last 25 years, pretty much they are going to change the world, and they are coming together. Let's look at two of them, solar energy and genetics. When we look at solar energy, let's look at 2015. Only 1% of the world was powered by solar. Today, 2020, we had 2%, and it's on a doubling pattern. So every 4 years, if it doubles up, and you just do the math, where it will end up, very soon we will have 50% of the world covered by sustainable, cheap source of energy. When you look at some of the mega contracts being signed globally on solar energy, they are costing about anywhere between 1.5 to 2.5 cents per kilowatt hour. Look at fossil-based energy, it costs anywhere between 8 to 12 cents per kilowatt hour. So it can completely disrupt the $6 trillion energy industry that we have today. Look at some of the implications. Look at what's happening in Germany. Look at what's happening in Peru. These are some of the implications of abundance that is being created. Let's look at genetics, one more space. 2001, when the first human genome was sequenced. Human genome is nothing but the 3.2 billion DNA base pairs that we have in our body, which is nothing but chemically coded information of our body. It cost $2.7 billion. Fast forward 2021, it costs less than $500 to do the same stuff. Now, what does that mean? The human body is now nothing but a software manual. What you can do with software, pretty much you could do that with our human body. So how we discover the human body better, the kind of ailments that we have, precision kind of treatments and so on and so forth for our genetically codified diseases, we can pretty much solve that problem anytime soon. So when you look at technologies creating abundance, culture doesn't stay behind. Even cultural shifts are happening. If you look at the concept of sharing idle resources in a shared economy or the open source world, pretty much it liberates so much of locked up resources. Things are available. I mean, we are in a different world as compared to a world where we used to protect everything with a patent and a copyright and so on and so forth. Look at all this is doing what? All this is resulting in a lot of democratization. Look at this little girl on the left, 7-year-old. She runs a venture. She is a founder of a crypto wallet venture. Look at this guy, 13-year-old Jose in Peru. He started a bank. Look at Jack and Drucker, 14-year-old in the US. He has actually figured out something for an early detection of pancreatic cancer at a fraction of a cost and at a fraction of a time. Now, when you combine all of these things, it's a lot of abundance. Now, what does abundance mean at the end of the day? Abundance is opposite of scarcity. The whole world of business was fundamentally structured around scarcity. If you didn't have scarcity, there was no business. Like you can't be selling ice to an Eskimo, right? So you need a completely different business model. And that's the reason why Kodak went bankrupt, and using same photograph as the commodity, Instagram made $1 billion business out of it, and so on and so forth. So basically, we have to look for novel ways of creating value for the client, delivering them and monetizing them. Now, this is very similar to surfing. If you are surfing, you have to keep paddling till you catch the wave. Otherwise, if you stay at one spot, you are going to be carried away by the energy of the wave back to the shore. It doesn't help. So you have to really catch the wave at the right time by paddling towards it. You can't be staying idle. Same thing if you look at this famous guy, Elon Musk. What he has been doing, he has been spotting pretty much every trend ahead of the curve, much before it was a black swan moment. Look at all his investment, whether it's in autonomous vehicles or space or satellites. He has pretty much started investing in them years before. Let's look at the second frame. How do we bring down the marginal cost of acquiring a supply? Now, the internet age, we all know, the cost of acquiring a new demand, courtesy digital marketing, referral marketing, social media, and so on, it has been dropping significantly. It is near zero. Today, it is same phenomenon happening with the exponential organizations. They're acquiring an additional supply at no additional cost. Let's look at Airbnb. The cost of adding 100 rooms in the city of Nairobi is near zero. Same for Uber and same for many other organizations that we will talk about, and you will get the essence of the whole thing. Let's look at the third frame. It's about how do you zero your distance to the customer. That is very important because consumption is really the source of value creation today. There is not much of excitement remaining within the walls of enterprise or the factory or the manufacturing of the product and production because it's all automated. Rather, consumption is getting more complicated, and so therefore consumption is becoming the new production. How you can therefore understand the consumption space and make yourself get close up there with all the understanding using technology is again a source of your value creation. Let's look at how all of these things are falling in place. Let's look at the comparison between a digital bank and a digital banking. Now, digital banking is what I would call, the legacy banks, the Bank of Americas and the Standard Chartered. These all provide through digital channels. We all access the services for which we had to go to a branch. Today, we can get all those services from sitting at home. But what's a digital banking? It's completely different. My bank, which is from Ant Financial, Alibaba's in China, the entire concept of value creation, value delivery is centered on data. So data is the source of value creation. Everything is centered on data. Let's look at this example. You'll get a sense of what I'm talking about. They are fundamental 310 model. One takes 3 minutes to fill up a loan application on a smartphone. The bank takes 1 second for the approval with a zero manual intervention, what they call 310. In that 1 second, they have looked at 3,000 different variables or data points before they could approve the loan, and 1% is their default rate. Just imagine, in the first 4 years of their operation, ever since they started in 2016, they have actually approved 29 million plus loans to as many small and medium enterprises, and bulk of them are women customers because they really wanted to empower the woman through the inclusive process of extending loans. And they are pretty much, the growing the economy of countries like China and several others. So therefore, when you look at a digital banking and a digital bank, there is no comparison. 700 million customers my bank has, whereas Bank of America has 70 million customers. You look at all these data points, $300 billion is the amount of money they have loaned out in just 4 years time frame to 29 million small and medium enterprises. I mean, just incomparable set of data. Let's look at the last frame. We could have gone much more frames on this side, but of course this time won't permit. So what is coming in the way? Can we be cognizant of them? Yes, absolutely. So it's very deceptive because our brains are not wired for this exponential thinking. We have grown up in a linear world. We understand very well, if I take 30 steps, 1 meter each, I move 30 meters. That's very easy to understand. But if I take 30 exponential steps, starting with 1 meter, I travel for 25 times around the world. Something that our brain can't easily compute that easily and get a sense of it. So therefore, the world that we are getting in, or we are already in an exponential world, it is very difficult to catch that, that nuance. If you look at a very similar example, like there is a species of bamboo that grows in several countries, including China. For the first few years, it does not even take off the ground at all, even if you give water, nutrition, sunshine, everything that is needed. But then 5 years and 5 weeks, in that 5 weeks, it grows 80 feet tall. So was it dormant for all this while? No, it was growing a strong enough root system so that it could withstand that exponential growth of that 80 feet, that tall growth. What are we doing to have our ground prepared is that fundamental. How a genetics company pretty much can disrupt an energy and lighting industry. Look at these guys. They married the genes of a firefly, flies that glow in the dark, with the leaves of a tree. So these trees glow in the dark. Now, just imagine you start planting these trees in the streets of Nairobi. What happens? You disrupt lighting industry and energy space. So the issue is technologies have their own slope of exponentiality. But the humans, the individuals, the organizations, the institutions, there is a bit lag. And the longer is the lag, the stronger becomes the immune system. Because we have to, courtesy COVID, we all understand the meaning of immune system. Now, that's for the right reason we had to resist changes, because otherwise we can't get disrupted every now and then. But today, disruption is by design, it is needed. Unless we get disrupt ourselves, we will get disrupted by others, right? So the last frame, this is where I'm going to give you the tips of how to build your own exponential organization. It is much less about skill set and tool set. It is much more about the mindset, because as I said, our brain wiring is very different and we need to look at that very critically. Let's look at what we did. So Salim Ismail, who is an Indian-born Canadian, he and his team did a research for 3 years before they came out with this book on exponential organization. It is about a framework, the 11 ingredients. He reverse engineered some of the fastest growing companies of our times, the Uber, the Netflix, the Googles of the world. What was really he found common in them, and he has structured them for our benefit. Now, that was not enough. There is a recipe, there is a cookbook, which is Exponential Transformation, that came up in 2018 after our experience of using these attributes on some of the leading names in the world. We'll talk about that. And what's the kitchen? That's a community of 8,000 people that includes people like us who are actually using this recipe and ingredients to come out with flavorsome meals. And I'm just giving you a taste of that or sample of that today. So these are the companies and many more that have been reverse engineered. We just talked about that. And this is the 11 attributes, and very quickly I will kind of take you through that. Let's look at the exponential transformation. Actually, these are some of the companies which were some of the early adopters of some of the themes of our EXO framework. And then based on that experience, we converted that into a recipe to the form of a cookbook. And this helps us in running what is called the 10-week sprint process, which drives the essential change to adopt the EXOs. So this is the 10-week sprint process. Of course, I will not get into the details of that, but you can always buy. It's all open source. It's all there in the form of books. But of course, you can always sign up for some programs and all that, which we'll talk later. Now, these are the attributes. Again, left-hand side, it is all about how do we access abundance, because there is so much of abundance. How we can access that? Because if we can access abundance, it brings down the cost of accessing talents, accessing capital, accessing market, and so on and so forth. And the right-hand side is about managing that abundance, because abundance means there are too many moving parts. How do you manage all of them? We'll take a quick look at that. And this is superpowered by what is called a massive transformative purpose. Now, why do we need a purpose? Why are we talking about the fundamental foundation of any EXO is having a strong purpose. If you look at our brain structure, motivation 1.0, which was about hundreds and thousands of years ago, it was all about survival. If we survive the day, we are happy. Let's look at motivation 2.0. This is from the industrial times, which is about if I did well, I get a carrot. If I did do bad, I get a steak. Now, motivation 3.0 is all about a sense of my meaning in life. Am I adding meaning to my life? Do I have a mastery on something? Do I have a value alignment? So it is all about autonomy. It's all about mastery. It's all about purpose, captured very well by the book by Daniel Pink and Drive, a strong recommended book from my side for sure. So these are the fundamental changes. And so therefore, if you really have to align your venture, your organization with stakeholders, this is the fundamental driver. Now, having done that, how do you access abundance? So these are the 5 elements, starting from stuffing on demand to community and crowd and algorithms. Let's take a quick look at that through some of these things. So stuff on demand. COVID has done several bad things, but one good thing it has done is, for example, you can tap into any person anywhere in the world for any project that you are working on, right? Something unthinkable before. For example, look at it. I'm based in Bangalore in India, but talking to you on this conference. Of course, it was possible technically, but mentally it was not possible. Just 2 years back, I spoke at a conference in Joburg. I traveled all the way. Again, 2 years back, I was at University of Nairobi giving a public lecture. I traveled all the way. Now, today, that's all possible remotely, and you can get stuffing on demand. Fundamentally, if you believe the best talent is not within the enterprise, but it's always outside the enterprise in the whole world. Let's look at algorithms. Google, the PageRank algorithm creates, $1 billion almost every 3 or 4 days. Netflix, their recommendation algorithm, that's at the heart of Netflix. If you look at UPS, the trucking delivery company, their routing algorithm saves them about $1 billion every year. Community and crowd, let's look at TED. TED organizes 3,000 TEDx conferences every year, powered by their community, delivered by them, completely free of cost. They're all volunteers. Leveraged assets. How do you leverage others' assets? Airbnb is a great example. Yours and mine spare room are used and aggregated to deliver a great value. Its valuation, as you know, is far bigger than some of the best known hotel chains in the world, and so on and so forth. So this is how we access abundance. These are some of the ways as examples. Now, again, when you have millions of moving parts, you need a way to manage abundance. How do you do that? So these are the other 5 attributes. I will not go into those details again for interest of time. Let's look at the same example of my bank now through a different lens. So if you look at my bank, their purpose is about humanizing financial, systems. That's what they're trying to do. They are not a bank. They're a technology-enabled risk management platform. That's how they see it. So if you look at some of the attributes, look at the scale, MTP, and ideas attributes and how it applies to them. Let's look at C, community. So there are a strong community of 40 million SMEs, and they are talking, having conversations. And when you have conversations of so many people, magics happen. You exchange ideas, you exchange thoughts, some become mentor for the other, and so on and so forth. Look at this fantastic thing that they've done through digital community. And this is a conscious creation of a 3D model. Digital finance, it starts with that application and that extension of the loan, which is digital finance. Then they impart digital skills, which is a way to engage, which is the e-construct, which is engaging them with knowledge so that they can digitize. These are small and medium enterprises, mom and pop stores. They can digitize their operations. They can digitally equip themselves and so on and so forth. In the new world, that's your tool to succeed. So C is covered, E is covered. Let's look at A, algorithms. Of course, as I said, it's a technology-enabled risk management platform. So it's all about algorithms. Leveraged assets, well, it takes in money. There is another part of the community, not only community of people who are taking the loans, but community of people who are giving the money for the loans. Because it is such an efficient platform, there are more than 400 financial institutions who have come together, who are giving the money for disbursal of loans because it's such a great business. 1% default rate, and you have a captive audience of 700 million is their total customer base. And they are focused on empowering and humanizing financial services. And who would not, come and join the community? So they have community, algorithms, leveraged assets, engagement. I, interface, sleek interface that enables all these transactions through the smartphone app. Dashboard. I was in Alibaba's headquarters a few years ago, and I have never seen anything like a real-time live dashboard that I have seen there. Experiments. They're continuously running experiments and so on and so forth. Now, you can do the same thing for Kiva. I'm sure you have heard of Kiva, loans that change life. Again, that's a purpose. Look at some of these numbers. I strongly recommend take a picture of this slide and try do it yourself. What are the scale and ideas attributes they are using? Of course, they have not read our books. They have not taken our services to do this. But when we reverse engineered some of these very successful companies of our times, the Googles, the Netflix, the Uber, the Airbnb, and so on and so forth, the Teslas of the world, the Kivas, the MyBank, these are the things we found in common. Now that we have given you the secret sauce of Silicon Valley, of the successful companies, of the exponentially growing companies, what is stopping you to do that? Nothing. Join this super amazing community of 8,000 folks like us, and of course, across 133 countries. And you can join, take a click, take a pic, and please join the community. It's all free, and then you can certainly do magics for your venture, for your company, and for yourself. Thank you so much for listening, and I really appreciate your audience. Thank you so much.
You always knew you'd be in for a ride. There'd be ups, downs, twists, and unexpected turns. It would be an exciting journey, even a little scary at times. And although it's difficult to predict what's around every corner, there's something else you understood. Transformation is essential for your business, your people, and your customers, so you can stay agile, resilient, and relevant in an ever-shifting marketplace. At SAP, we understand that true transformation is a journey too. It goes beyond the edges and deep into the core of your business. But it's a journey you don't have to take alone. No matter where you're starting from and where you want to go, we're by your side to simplify planning and execution and integrate data, intelligent tech, with cutting-edge ERP that will accelerate outcomes on your terms and on your timelines. The road ahead is clear. The next turn truly transformative. It's your time to rise with SAP.
Thank you, Suman, for your insightful insights on exponential transformation for organizations. Now, fintech is about increasing the velocity and eventually the value of money. Previously stifled by siloed products and services, APIs have taken their rightful place as the grease that is turning the cogs of refreshed user experiences. If you have ever wondered how to leverage technology for business, Francis Dairo is the man to talk to. Francis is currently an industry value advisor for financial services working at SAP. He enjoys engaging customers to align their business needs using the right technology stacks. Having worked in financial services, management consulting, and in the IT industry, he has keen interests in tech, infrastructure, innovation, and enterprises. He will share with us about the growing importance of APIs in banking.
Hello, everybody, and welcome to my session. My name is Francis Dairo. I'm a customer advisor for financial services with SAP based here in Nairobi and covering East Africa. It is a pleasure to be with all of you today in this webinar to see how, as fintechs and as also financial services sector, we can be able to innovate. And with that, I pose the first question. Do you think we are ready to innovate? Do you think we are ready to digitize and be able to service our customers with our needs? The APIs traditionally had to do with the interfaces between various systems. But with the banking services, this has gone beyond traditional banking institutions. It has brought in more players other than banks themselves. This does not mean that banks will die. Instead, they will continue and, as we see, evolve and adjust to the new times. For a financial institution, the basic principle of trust will always remain. As you are aware, for you to be able to transact with anybody, a business partner, for you to save your money, deposit your money, for you to make some payments, you must be able to trust that medium. So trust, I think, is the bottom line. Now, in Kenya, we need to be cognizant of our unique situation, and we're not only served by the traditional banks as we know them. We've got SACCOs, deposit takers, digital lenders, mobile providers, and these are key in considering anything fintech. And so I will take you to our proposition as SAP in terms of what APIs are. And it will be based on the financial ecosystem that I've just mentioned, that entails beyond the banks and goes into other institutions and other players. As SAP, we value APIs, and we know that these are very, very key in your digital transformation as a financial services provider, as a fintech, as a product developer, and so on and so forth. Our APIs, we see them as modern apps. Okay, they are people who consider them as DevOps. And one other key element that we have is that we know the importance of open integrations. API management requires full lifecycle and management of these APIs. So from a technology point of view, you must be able to have a hub. And as SAP, we've developed this hub for you to put your API catalogs and publish them out there so that anybody can be able to tap into them. Secondly, there is a management of these APIs, and probably this is the biggest headache for us in the technology space. Because these APIs need to continue evolving, they need to integrate into new things, they need to have security, which is key, especially in the fintech space. You need to be able to integrate them easily to any new channels. And last but not least, I think we always talk about monetizing and having revenue streams developed out of these APIs. One of the other things that is key is that you need to be able to leverage prepackaged best practices of these APIs. And that is why there is the API hub that SAP offers you. Our motivation is to simply connect you and make your digital experience, starting with your employees, going into your partners, and your end customers, depending on how you interact as a financial institution. They must be contextual. In that element, what we mean is that they must be able to address certain use cases or certain needs or certain scenarios. They must provide real-time digital interactions. And this is another tough question that we always pose to ourselves. Are we really real-time? Because we know very well, after business hours, there'll still be people behind there working at night, trying to reconcile various transactions, various errors, and so on and so forth. That real-time element is a very, very big challenge, and is one of the important areas that I'll be talking about later on. And then last but not least, as we see the opening up of new business models, we know very well that IT landscapes are quite complex, with banks especially what we call legacy, meaning that you have developed these systems over the years, and it is very, very difficult for you to just shelve it and move probably, let's say, for example, into the cloud as compared to other industries. There's also the element of regulation. And with this, I'll bring to you the 5 important things that we as SAP in our proposition think are key for you to manage your APIs. The first one is that you need to be able to have your digital experiences very, very smooth and managed well, and you kill the complexities. So for us, we have got 2 elements that we work on. We have got the apps that you can develop, that will sit on the APIs, and at the same time, there is integration. And these are the digital building blocks that will enable you to unlock your data, empower users for self-service, and last but not least, connect and innovate. Now, when you talk about APIs, there are three key elements technically that SAP bring on board. One of them is the Open API specification, what we call the OAS. Most of you in the tech field, you've heard about this. It's more of web APIs over the HTTP protocol because it brings more flexibility in terms of the agility of using these APIs. There is the open data when it comes to hypermedia. So when using things like artificial learning, IoT, we'll be discussing this later on in our panel. This will be very key for you to be able to digitize and be able to integrate your APIs. And then last but not least, there is a SOAP protocol and the WSDL. And these are key into you developing these APIs. Now, the other 3 elements are to do with the ecosystem. So as I was talking about this earlier, the other 3 elements, and these are to do with our ecosystems. And our ecosystems, I will put it into the following areas. The first one are the fintechs, or these guys who are trying to digitally really disrupt us together with the payment service providers. And I put these 2 together because I believe they are key, especially for our market here in Kenya. So as a fintech, you need to be able to collaborate with your banker, collaborate with your SACCO, to be able to bring these intelligent technologies together using the APIs and evolve faster. Elements of AI, machine learning, even blockchain, though we've probably a bit scared about talking about this, but these are very important things. Last but not least is the cloud part. So your API must be able to integrate into all these technologies and be able to give you these user-based services and cover your revenue streams. So one of the key elements as SAP that we provide, I mentioned earlier, is on the API management is your billing. So that is one very key important area so you can be able to collaborate. The other element is to do with the payment service providers. And these are the fintechs I talked earlier. But one unique thing is the element they bring in customer service. Things to do with managing your customers. So customer data, okay, and your APIs, you must be able to integrate customer data, going beyond even third party, going to fourth party, maybe even fifth party, okay? People who you'll not be able to directly connect with, but those guys are feeding into the APIs that you've broadcast there and that are going to ensure that you provide that service. The other key partner that I believe is very key is the productization or the product element. And these are, maybe you can even call them fintechs, but they provide a certain service or a product, okay? And a very good example that I would like to use is for the B2C. So a lot of times when it comes to the API management in the fintech sector, we're always thinking about the end customer as a retail, as a human being, okay, as an end user. But what about the businesses, the SMEs? So products such as utilities, contract management, people management, expenses, even things to do with data management for vendor management, where you want to see, is the person I'm dealing with as an SME in this contract, is he worth doing business with me? Okay, and those profilings that are there, and those advanced levels of profiling that can be used by productization. And then the last one, I think, is also very important, are the data providers. And I think this goes beyond doubt that this is a key element, especially to provide insights to the banks and their ecosystems. So you can imagine, as a fintech, when you're providing a service to a retail store, and the people who are shopping can be able to get some form of financial loan or some form of even points that is going to help them probably buy new things or be able to connect maybe into a gym, to their lifestyles and all that. Data providers, you must be able to assist in risk mitigation, and last but not least, reducing the churn and bringing in customer loyalty. So in a nutshell, there are the three elements I talked about earlier for you to be able to execute your API well. One is your business and ecosystem. Are you able to understand your audience, internal, your partners, your public, the customers, customers? Secondly, why do you need those APIs? To unlock what? Is it integration? The other thing I mentioned earlier about monetization, money. Is it your channels? And then very key, regulation and standards. And that is why we were talking about thinking bigger in terms of the Kenyan context, beyond the banks. Let's go into the circles. Let's go into the money providers. And then on the API management, how do you develop your API? How do you define your best practices? And how do you drive partnerships? Because you cannot develop these APIs by yourselves. How do you work with those productization companies that I was talking about earlier? And then last but not least, how can you develop your APIs and offer them to your ecosystem without you having a lot of stress and manage the life cycle of those APIs, such that the API management and that hub that I was talking about that can be utilized, especially that we're providing as SAP. And these also can integrate into the accelerators that we use. For example, Amazon Web Services, Microsoft, and Google can be able to easily integrate with those three partners because you've signed agreements with them. And for me is to tell you, as you think about your APIs, is your business ecosystem ready? Is your API management all set? And can you fully go digital and accelerate your business to the future? Thank you.
We serve about 50,000 customers in our 52 centers nationwide. With the sensitive large data we handle every day, we've got to work with a partner that provides security for that data. The Telcom Enterprise provides the secure links to connect our Huduma centers, the ministries, departments, and agencies with which we integrate to our data centers. Only Telcom Enterprise has the capability we need to provide efficient services countrywide. Telcom Enterprise puts the enter in enterprise.
Telcom Enterprise, enhancing business growth.
Wrapping up the technology segment is a power-packed panel that will delve into how Industry 4.0 is transforming the financial service institution. To take us onto this panel is Humphrey. Humphrey, over to you.
Well, thank you very much. And in fact, thanks for being there since we started our session early this morning. Now, today, the fourth industrial revolution is bringing the hope of a new era of Africa's transformation. Now, and the prosperity and as it is changing, as the industry is rather changing so fast, it is paving the way of how we think, how we work, and indeed how we are buying into various technologies. Among them, is the fourth industrial revolution technologies. Now, of importance here is how do we focus on these unfolding technologies, building the infrastructure that we have during the digital evolution, and the potential of fast-tracking the integration of the continent, not only the continent, but also the enterprises that we serve, so as to make an impact into the value chain. Now, to join me in the discussion that we are going to have, a very interesting discussion that we are going to have now, is Chad Toirain, Francis Thairu, and John Mark Sebunya. John is from Uganda, Francis from Kenya, and Chad is joining me from the UK. Thanks so much, gentlemen, for squeezing a moment to discuss with me how the industry 4.0 technologies are going to transform the FSIs. Apologies from Rose Moturi, who could not join this session owing to reasons that were just beyond her control at the very last minute. Now, let us jump straight. Gentlemen, as you introduce yourself further, I will begin with you, Sebunya, our good neighbor in Uganda from Kenya. In your own understanding, how is the fourth industrial revolution technologies transforming FSIs?
Hello, can you hear me?
I can hear you, Sebunya, loud and clear.
Okay, thank you very much. Good morning, good afternoon, everyone, depending on where you are. I'm very privileged to be part of this panel discussion. My name is John Mark Sebunya. I'm the head of Fintech Architecture for the MTN Group. To the question around the 4.0 technologies, to put it very simply, there is an explanation of where we've been and where we're going. We have been at a time whereby people have had to work with computers. To work with computers here is to say you want to apply for a bank loan, you go to the bank physically, the bank manager or the loans officer asks for your information, you write it somewhere on the paper, they collect that, type it into the computer, and then they do their processes. In doing so, literally they're working with the computers. The people are working with the computers. So we've been in that era for a while. But then 10 or so years back, things have started to change to where computers work without humans. It is now possible that you can be able to do the loan application digitally, get approvals with algorithms that have been built already, and get the money disbursed to your account without a human intervention in the middle. So that is the era where we are, and computers are working out humans. So just to put it simply, we are transitioning from where people work with computers to where computers work without humans. Now, I've used the example that is typically from a finance ecosystem, a financial service industry. There are so many examples of where we're seeing computers working without humans. There are different discussions around what we call the Internet of Things, whereby everything gets connected over the public internet using internet protocols. So the Internet of Things is seeing the evolution of a mobile first, especially within our African continent, where mobile is very important. Now, most of our people's access to financial services, especially in Africa, has been through a mobile device. Now, in that case, we are seeing mobility being central to the transformation Industry 4.0 is bringing to us. We're seeing what we call machine-to-machine kinds of technologies. machine-to-machine kinds of technologies, you would find, for instance, you're purchasing a device, which could be a car. You need to track this device. The insurance needs to know how you are using this vehicle, where it's moving, and all other bits are about it. Typically, they just have to install something onto this car, a tracking device or another kind of software, and then it communicates to a system to get information and then pass it on to the system. The system will have its algorithms of aggregating this information, making a report, and later this transforming into what they will use in deciding your insurance premium when you come to renew. So this is application of machine to machine. We see applications in lending, very typical within our ecosystem, whereby micro lending in Africa and other parts of the world has been a growing trend over the last 10 or so years. Now, to my first example, micro lending is literally having a situation whereby people are using mobile devices, using applications that have been provided, and then they are able to apply for loans without any human intervention. Now, the back end is that there's the application of big data, the application of artificial intelligence. For the interest of time, we may not go into so much detail around this, but these are technologies that are enabling this. Cloud technologies, all these are coming to play to drive this bit whereby computers are now working without humans to help us get services, to help us make decisions. Importantly, around all of this is the concept of the APIs, whereby the evolution that we're seeing right now of fintechs would not have been realized if APIs were not at play. Traditionally, what we knew as financial institutions, the likes of the banks, typically were financial institutions and insurance companies, were having their own mode of operating. Now, we are now in a generation where you have what you could call intermediaries coming in, institutions which were not inherently banking institutions, now being financial institutions. We are seeing embedded finance. Now, what is enabling all these institutions, the fintechs, the tech fins, those doing embedded finance, what is enabling them actually now be possible to be part of the ecosystem, be part of the value addition? It's because of the availability of APIs. So everything that we're doing in this era now, even when I talk about machine to machine, big data, artificial intelligence, APIs are central to the realization of. So in summary for now, that's my submission on how we are looking at Industry 4.0 technologies.
John Mack, you've actually broken down how the trend has been from where we started with the human to machine and now machine to machine. And indeed, going forward, we are likely to see more. We are quite exposed, and indeed this takes me to the next question. Chad, could you tell us, from your own view now as a cybersecurity expert, with the move to 4IR, what cybersecurity threats could be on the horizon, even as we invest further on 4IR going forward?
Great. Firstly, thank you for inviting me. It's an honor to be here, and welcome to all the people listening in, and to our other panelists. Thank you for having me. To introduce myself, I'm Chad. I look after the Sub-Saharan Africa region for Cloudflare, and just to explain a little bit about what Cloudflare is. Cloudflare's got this simple yet bold mission statement where we want to help build a better internet. And we believe we can do that by making websites, applications, networks, and people more secure. We want to improve the performance of those websites, and we want to make it more reliable and easy to use. So that's just a quick nutshell about Cloudflare's vision. When we start looking at the move into the fourth industrial revolution, as the previous speaker mentioned, it's really all about the premise of machine-to-machine communication. And that is driven through APIs. And those are application programmable interfaces. And effectively, those are the computers talking to each other. That infrastructure itself would be something that you would need to protect, as with any infrastructure. So what we're starting to see with the move to the fourth industrial revolution is effectively, I think we're all familiar with this term, it's digital transformation and the migration to the cloud. And what we're starting to identify when companies and organizations are looking at moving to the cloud and looking at transforming their digital infrastructure, transforming the infrastructure into a digital format, they are now taking that move into the fourth industrial revolution, where computers are doing a lot of the communication on behalf of humans. So where there are threats is because when it's on a very high level, we're starting to see an uptick specifically in ransomware attacks, right? And this is coming in because there are organizations that are late to the party when it comes to migrating to the cloud and with their digital transformation. And those companies are legacy companies. And then you've got organizations that are digital first, and they are born in the cloud. And there is that middle space between where people are, or organizations are moving into the cloud. So what attackers are starting to see is that the organizations that haven't made that transition yet, or during or in that process, they are the most vulnerable at the moment. It's almost like they're sitting ducks. So we're starting to see a lot of uptick in attacks targeting that group particular. And the reason for that is because what you will find is that the organizations that are already in the cloud, there are certain security protections that the cloud offers these organizations in terms of the latest security standards and services that you can use. The most important underlying service is called zero trust, using a zero trust architecture and approach to your security. And like I mentioned, those legacy companies, those are usually the kind of infrastructure type companies. So we recently noticed that in the news, a pipeline in the United States was actually attacked. And those are the type of organizations that are really vulnerable, that still have these mini legacy systems. So those are some of the high level trends. Some other trends that have kind of triggered the acceleration of transformation is COVID and remote working, obviously brought on by lockdowns across the world. And effectively, a lot of people are working from home, and they're working from unsecure devices and maybe unsecure internet connections. And the problem with that is, obviously, the hackers and attackers can find a way in through those vulnerabilities and then get an understanding of your network that way, and then start coordinating their attack, right? So where Cloudflare can almost assist, or our approach to solving this problem, is we've looked at the entire internet. To give you an idea, Cloudflare sees a lot of the internet. We have about 1 in 6 of every website in the world on our network. So we've got a lot of internet running through Cloudflare. And when we look at the whole internet and the whole view of the network, we understand that there are companies that are vulnerable because of legacy on-premise systems. We understand there are companies that are in the kind of transition phase to in their digital transformation into the cloud. And then there are companies that are born in the cloud. Our approach is to protect all those companies with a zero trust architecture. And that's the way that you would solve for security threats in the fourth industrial revolution.
That was so elaborate. Very excellent indeed. Thairo, allow me to come to you so that you can break it down to us in terms of the various opportunities that we have with the 4IR. You could be specific on, say, the cloud, what we are really going to benefit from it. particularly from the FSI perspective, sir?
Okay. Again, hello, everybody. And thank you very much to the audience and to the panel for this lovely webinar on the fintechs. I know it's a year late. So going to the cloud, I think the first thing is time to value. Okay. And what I mean by time to value is how fast will you accelerate you bringing in a product or a service or connecting to a partner that is going to bring in value to your end customer. Okay. Another very important thing is regulation. I think Chad has mentioned that, and also Jean-Marc earlier when it comes to also the telecommunication sector, because that is one of the partners as financial services or as a fintech you're going to ride on. So I think I would leave that to the lawyers, okay? But as technology experts, we are here to support you in terms of bringing the confidence on data protection, because that is key, because you don't want everybody's information out there. You don't want people to feel vulnerable that the information has been hacked. And last but not least, probably in our region here in Kenya, there's the Data Protection Act that has brought in a lot of stakeholders beyond even financial services, the banks, the telcos, even the communication authority when it comes to digital signatures. So that's a very good move from our end, because that will be able to hasten our move and adopt these technologies. Another element is openness. Okay, so when you go to the cloud, it makes life more easier, because you can be able to openly connect and interconnect either with people within your industry, with peers, with product providers, with telcos, for example, MTN, Safaricom, financiers, traditional financiers that will be in the back end giving you a service, and probably even the ecosystem providers that we touch base with every time. So if you're in the transport industry, it could be you in a train, in a bus, in an airline, in a hotel, in a supermarket, in education sector, and so on and so forth. Another thing that's a hurdle is probably performance. Okay, and so when you're running these big workloads and complex workloads on premise, your landscape, may be a bit slow. You may have to always keep in patching. And this is one thing that we talk about as technology providers is total cost of ownership. Okay, so trying to break down those silos, reduce complexity in your data landscape, such that you can increase your performance and be able to use these technologies. And then last but not least, as probably I share more about SAP. So in SAP, we do not call them 4.0 technologies. We call them intelligent technologies, because they'll be able to give you more insights. They'll be able to help the fintech, or even when it comes to the bank or the financier, to be able to utilize IoT, as you had mentioned earlier, artificial intelligence, machine learning, robotic processes, for you to be able to provide those insights and be able to connect with your end customers. And also big data can be able now to utilize audio, voice, text messages, facial recognition, and such use cases in a much better way. Yes. So with that, I think I'd like to pass it on so that we can be able to probably engage further.
Excellent. Thank you so much, Thairo. In fact, so insightful, considering that you have delved into other areas that we hadn't hinted earlier. So far we have security, we have from telecommunications angle, and in fact, a solution provider. But then, as we are talking about financial arena, or rather the financial sector, which cannot afford mistakes. These numbers are usually so important, really, to the bankers, in anyone who is running any business, particularly that would revolve around fintech. But technology seems to have a latitude, some bit of latitude in terms of making mistakes. Hence, where Chad comes in and says, yeah, we need to really protect the systems. To you, John Mack, while the finance sector cannot afford these mistakes, and technology seems to have the latitude to make mistakes, how should the industry players ensure that the financial services industry is sustainable and that as they embrace the fourth industrial revolution? Please just make this so brief so that we can also hear from the rest of the panelists, please.
Yeah, thank you. So it is really acknowledgeable that if you look at finance, you definitely, if you look at it from a consumer perspective, you don't want to be in a situation whereby you're transferring $10 and then you realize $1 is gone. So that $1 is very important for the consumer. And of course, gradually, even if it's $1 someone is losing and you look at the whole ecosystem, a lot of loss can happen. So what happens from a technology perspective, you have what we call architectures, technology architecture. Now, the technology architecture that we build in this era, yes, we look at an architecture that is robust, that is complete, that is resilient, to ensure that if anything is happening within the ecosystem, you don't lose anything on the transaction. Let me put it this way. We know, for instance, you might have a data center. It could be in the cloud, where we are going. And something can happen and your servers, for whatever reason, are failing. If your servers are failing, your architecture should be robust in such a way that it should heal, auto-heal, such that people who are doing transactions don't lose anything within this transaction cycle. So you give them the comfort that whatever happens within my platforms, you're not going to lose anything in your transactions. Then there are also elements that we build in within the applications. There are principles that we use in architecture design. For instance, in fintech, we do systems and call them with principles like irrevocability, whereby we guarantee that we've built the application, the process flow in such a way that end to end, when the transaction is done, it is irrevocable. You're not going to complete the transaction and then someone claims that someone kind of calls back the transaction. There is the bit of from a security element, we try to ensure that we comply to the security CIA, confidentiality, integrity, availability to the platforms. So all this is to ensure that we minimize and eliminate mistakes. So I'll just stop at that point for the interest of time for the other colleagues to supplement.
Indeed, John Mark. Thank you so much. Maybe I can just hear. In fact, the director who is guiding us through this pace of giving our presentation tells me that we are actually running very dead end on time. But thanks for your contributions. Just very quickly, Chad, maybe you can also make a contribution towards the same. We can't afford to make any mistakes when it comes to finances. There comes in the element of protection, indeed, when it comes to the technologies that we're using.
That's right. And I think what's important is taking a zero trust approach and ensuring that your technology is secure, your infrastructure is secure, it's performing very fast, and it's reliable. And we at Cloudflare, we service a lot of the financial services industries. We've got large banks, as well as stock exchanges and fintech companies on our systems, and we're able to deliver that through an any cost network. And that's the key there, is to find the right partners that can give you the security, reliability, and performance.
Thanks, Chad. To you, Thyro, just on the same perspective, a minute, please.
Yes, thank you very much. I'll make sure I wrap up in exactly 1 minute. So, as SAP, whenever you come to the table, we tell you, number one, you need also to create a policy and a team that is going to work with us. Secondly, what we bring to the table, as SAP, we are here to make the world run better and simplify your lives. So one of the things that we bring to the table is the ISO and various security certifications. Should you use our cloud infrastructure that is also running not just banks and financial institutions, but also military installations. And for me, I believe military installation is the most secure and are the most cautious people when it comes to technology. So for us, to the table, we'll bring to you a database and data management as part of our business technology platform. And it comes out ready, whether you're a bank, a legacy bank, or a neo bank or a fintech that wants to go into this digital transformation journey. We bring in already built-in data models for you to be able to use. Secondly, when it comes to integration, there's predefined content that can be able to work with our partners that will help you in your risk management. And in that way, we give you the confidence that when you put in a 0, you get a 0. When you put in a 1, you put a 1. When you put in a 1 times 1, you get 1. And when you put a 1 times 2, you get a 2. And then last but not least, the accelerators that you're able to get when you work with us, you'll be able to easily plug in into any of the technologies, be it machine learning, artificial intelligence, blockchain. If you want to actually, we have got POCs running globally between North America and Europe. We would really like to bring Africa into that context, so we can be able to bring in those partnerships for you to make things go really, really good as a fintech, as a financial services provider, comply to the regulators' requirements, and also bring in financial inclusion and ensure that we'll be able to bring financial services to each and every human being in this planet together. Thank you very much.
Indeed, and I must thank you, gentlemen, for very thought-provoking insights that you have shared with us today as we embrace Industry 4.0, which Thyro says they are calling intelligent networks. Just one parting shot, maybe from each one of you as we move on. Yes, please. Sebunya?
Yeah, as we're looking at the implication for financial services, I would say we are in an era whereby what we call instant and inclusive payment systems are very important to our ecosystem. But for these payment systems to be instant and inclusive, security, availability is very important. So it's important that we as an industry are always able to collaborate on the elements that will make our ecosystem trustworthy, more secure. Thank you.
Thanks to you, Chad.
Thank you. It was a pleasure to be part of the panel, and thank you for listening. I think just in closing, we're working currently with a lot of financial industry companies, not only in large banking but fintech as well. And I'm sure there's some of our customers listening in. And just in closing, we've got to focus on keeping everything secure, or in terms of your infrastructure, as well as making it faster. So I would love to welcome you to reach out to me, and we can certainly look at your business and see how we can help.
Thank you so much, Thyro. 10 seconds.
Whoa. Time to value. One platform that you're able to leverage your existing data sources and data universe, open standards, give you good performance, help you navigate in complexities, compete well, And last but not least, understand your customers much better and be proactive. So looking out to networking with you, to using SAP as your business partner. And thank you.
Thank you so much, Thairo. Sorry to interrupt you, Thairo, as you're making your very valid point. And I must thank you also, my dear audience, for listening in through and even sharing some of the questions that will be responded to by our panelists on the course of these ongoing discussions within the day. Signing out from the on-air studios at CIO East Africa, it's Humphrey Odhiambo. Thanks so much.
Businesses are rapidly adopting cloud computing, taking advantage of its flexibility and speed. Whether consuming SaaS applications, building cloud-native applications, or migrating existing applications to the cloud, finding a security solution that addresses a diverse set of needs is critical. Fortinet Cloud Security Solutions deliver. Get the confidence you need to deploy any application on any cloud supporting any initiative. Fortinet supports all major cloud providers, ensuring that critical assets are secure and that security is manageable. The Fortinet 3-pillar cloud security strategy provides the same level of security across multiple clouds by natively integrating security into the cloud platform, defining security policies for cloud services, and leveraging cloud services for security, ultimately enabling automation of security services. Fortinet provides the industry's broadest set of cloud security products, enabling you to use the same security in the cloud as you have on premises. By using purpose-built security tools in the cloud, you'll save time by leveraging existing skill sets. By managing security across multiple clouds through a single pane of glass, and by automating the security lifecycle management, you can better leverage existing skill sets and accelerate the confidence to deploy applications anywhere. From consuming cloud applications to building applications in the cloud and migrating IT to the cloud, Fortinet Cloud Security Solutions cover the broadest set of use cases, delivering the flexibility and confidence to use the cloud in a way that best serves your business.
It's great to be back. You know, as you're approaching lunchtime, I was speaking with Humphrey, and he asked me this question and said, "Why is money called dough?" And I'm like, "Don't start. You know, we're not at lunchtime yet." Then what he said money is called dough because you all need it. And I'm like, my God, not now. That was a fantastic end to what was a great panel. It's unfortunate that we didn't get to hear from Rose. Thairo, thank you for your insights about the APIs and in the banking spectrum. And now I'd like to, as APIs are the grease, now of course cloud technology is the infrastructure that brings it all together. And Chad will take us on a flight to explore exactly that. Chad is a sub-Saharan lead at Cloudflare and is just the man to tell us about the critical space that cloud occupies in the fintech solution stack. Chad's value proposition is to listen, empathize, and help solve customer-facing challenges and problems. He has 10 years of ad tech, social media, and operations experience with leadership across 5 markets. He has a passion for technology and an entrepreneurial spirit. He has had the privilege of working with incredible brands, hitting and exceeding his sales targets. He has done this successfully with some of the world's most recognizable brands, including Samsung, Ford, Twitter, Vodacom, Nestle, Tommy Hilfiger, National Geographic, and Nike. Let's take flight with Chad.
Hi, everyone. I'm Chad. I look after Cloudflare from a commercial perspective here in Sub-Saharan Africa. And I'm really excited that you're joining me to learn more about Cloudflare. Today, I'm going to talk about Cloudflare 1, where I like to say is where security and simplicity meet. And we're going to cover topics such as SASE and Zero Trust and how you can transform your network. So if you need to get hold of me, these are my details. Feel free to email me with any questions, or if you want to ring me, go ahead and do that. So just to open up, Cloudflare's value statement is Cloudflare is an infrastructure company providing our 4 million customers with infrastructure as a service, network as a service, security as a service, with the value proposition focusing on security, performance, reliability, and ease of use. This enriches our customers' infrastructure while being cost-effective and market competitive. So these are the 4 key tenets that you will see coming through when you hear more about what we do and how we provide our solutions. We built on a privacy-first anycast architecture, which we'll hear a lot about, while delivering SASE, zero trust solutions at scale with unprecedented visibility and logging, and the ability to integrate seamlessly with other vendors and services. So let's start with what we're seeing today on the internet in Kenya. So this is data that we are reporting on our network from the traffic that we see on our network from a website called radar.cloudflare.com, which is publicly available and you can go visit it. The data is dated the 14th of May, and we're looking at a 30-day snapshot of attack activity. And what you can tell from this graph is that DDoS activity has increased by 111%, with 29% of that traffic being bot traffic, 56% of that traffic being mobile traffic. And these attacks are originating on a network layer on TCP and UDP ports. So those are your non-standard HTTP ports. On the HTTP side of things, on the application layer, what we are seeing is that 97% of attacks are volumetric DDoS attacks trying to hit the application. And our WAF and firewall is blocking 1% and 2% of those attacks respectively. So what you can really understand from the slide is we're blocking a lot of DDoS attacks. And on the right, you can kind of see the graph of when DDoS attacks are, increasing and spiking. So what are the key drivers of the fact that we can understand that attack traffic is increasing? So one of them is zero-day attacks. So zero-day attacks are when attackers have identified a zero-day vulnerability and they found something that's unpatched in your network and they're looking at exploiting that. Typically, once that's been identified, they would also start coordinating an attack to kind of look at your entire estate and figure out ways to attack specific parts of that estate. And they would then issue a ransomware attack. So you would get the kind of the email to say that they're about to attack you unless you pay a certain amount of money. What would happen is, there's also, if they do start attacking you, they always start with a DDoS attack, and then there's a coordinated strike on all your different infrastructures. Now, I get asked a lot, how do you protect yourself from zero-day vulnerabilities and ransomware? And this is where we're going to uncover a little bit around Cloudflare and how you can protect yourself with our system. Another key driver is the shift from working in the office to a remote working environment brought on by lockdown and COVID. And what we're starting to see is a lot of people are working from home and their devices that they're using might not be the most secure, might not be updated, hence a lot of vulnerabilities can creep in. Also, the internet connections that they're using and the networks that they're on to connect to your HQ are not the most secure. Another key driver that we're seeing is the requirement of keeping up to date with the latest industry standards. For example, GDPR in Europe and POPI in South Africa, and privacy and data management is becoming extremely important. And I'm happy to say that Cloudflare is ISO 27701 certified. I'm one of the few cloud providers that are, and that gives you the confidence that when implementing Cloudflare, you're going to be aligned with these certifications. So with all those key drivers, the trend that we're starting to see is that the data center appliance-based approach is effectively outdated and broken. And the reason for that is because the data center appliance-based approach is quite, firstly, very expensive. Having to building out a data center and bringing these hardware resources on premise and having to install them and ship them over and make sure that they're connected correctly, and the labor intensive side of it is what makes it expensive. This also brings in a lot of increased risk, because every time there's a new problem, there's a new appliance that is bought and trying to be patched into the network. And the problem with that is you now end up with multiple vendors with inconsistent security policies and not a strong security posture. And that increases your risk. And then there's the issue of scalability, especially with people moving to remote. What we're starting to see is that the traditional hardware-based approach cannot handle the demand that peaks. And also that hardware is not elastic enough, if you need to downgrade or upgrade. And this is where we're starting to see the shift from the data center appliance-based approach to a user-centric cloud-based approach. And this transition is termed Secure Access Service Edge, or SASE for short. And what that really means is that the cloud is now becoming your corporate network, where your branch office, your employees, contractors, consumers, your public cloud, and your enterprise data center can connect, and all your hardware and appliance-based on-premise services can connect into the cloud and provide you with a centralized cloud-based service, where you can get network as a service, network security as a service, your applications and your data in the cloud and centrally managed. And this is done in a secure zero trust way. Gartner, who coined the term SASE, also predicts that 40% of enterprises will adopt SASE by 2024. So it's very important and on everyone's roadmap. And Cloudflare has actually been leading the architectural shift on the network layer to a cloud-based, user-centric secure access service edge for the past 10 years, because we've been building out this massive network. And SASE is made up of all these different components. And when we look at what Cloudflare offers today, we're leading the way. We provide about 95% of all these different use cases. And the items that are in gray, the ones that we don't provide today, are most likely on our roadmap. The ones that are in orange are the ones that we have right now. Items such as a network firewall, web application firewall, a VPN, secure web gateway, protecting against data loss prevention, remote browser isolation, DDoS protection, and a variety of cost-saving and performance-enhancing services. These all make up SASE, and these are all the things that Cloudflare offers today. I spoke a lot about Anycast network, and this is one of Cloudflare's superpowers and our key strengths. So what this really means is that every single one of our data centers, which are in 200 plus locations in the world right now, all run the exact same technology stack in them. So the slide I just showed you now, all those different services, we provide that at every single one of our points of presence. This gives you a superior advantage, because now you no longer have to sacrifice performance for security. You get best of both. From a security perspective, your perimeter is now extended to Cloudflare's edge, which is effectively 200 and more locations across the world. So if you're getting an attack anywhere in the world, we will stop that attack at the closest point of presence to the origin of that attack. For example, if an attack is coming in from the USA, for example, or Russia, we will stop that attack at the Russian data center. From a performance point of view, we will accelerate your content, because we will now cache your content and deliver it to the closest point of presence to your customers, wherever they are in the world. Addition to that, it's backed by 51 terabits of network capacity. To give you an idea, the largest attack we've recorded on our network was 1 terabit of network of size. So our network is 51 times the size of the largest DDoS attack on our network. So you can have that peace of mind that we can stop any size attack. We guarantee 100% uptime of our service. We have this ambition of being as close as possible to every single person on the planet, and we less than 100 milliseconds away from 99% of the world's internet connected population. We have 25 million internet properties on our network. That's important, because that means that we are understanding the internet. We have a lot of internet running through our systems. To give you context, 1 in 6 websites are on the Cloudflare network. So we get that unprecedented visibility of the different attacks that are coming out all the time. And this is how we protect you from those 0-day vulnerabilities. Because the minute a new attack comes out, we will know about it and we'll come up with a patch and automatically fix it for you. And to give you an idea of the scale that we operate on, we blocked 76 billion cyber threats each day in Q3 2020. And to deep dive a little bit further into the security benefit of having an any-cost architecture, this slide illustrates it very well. What you're seeing on the left is the legacy way of mitigating DDoS attacks, whereby if an attack is happening, you would have to switch on your service. The service would then reroute all your traffic to a centralized scrubbing center, which what I found in Africa typically sits offshore. So it's not truly an African experience. The traffic will be scrubbed. Sometimes it will get false positives, and then the traffic is sent back to your origin in country. This adds a lot of latency, and it's not a great user experience. On the right, what you're seeing from Cloudflare is the benefit of an any-cost architecture. So as I mentioned, we will stop the attack at the source of the attack, wherever it might come from. No one can tell these days where attacks are coming from. It's so easy to launch an attack, even off your smartphone device. On the internet, you can just, doesn't matter where they're sitting from, and they can also launch the attack from anywhere in the world, from whatever server. So having an any-cost network helps you protect against that. Whilst we are stopping those attacks, we're also improving your customers' user experience, because we will cache your content and improve the performance of your content to the closest point of presence to your customers. So as you can see on the image on the right, while an attack is being stopped, your customers are enjoying your website as if nothing is happening. And most importantly, your origin locations are protected. And to answer the question of our presence in Africa, Cloudflare is growing in Africa. We are partnering up, we are employing people, and we're also investing heavily in our infrastructure. We've got presence in Kenya, and we've got 16 data centers across the continent. So that gives you that resiliency to know, we've got that protection across the continent, and also the redundancy across the continent. But also it gives you that comfortability to know that we can cache your content locally and we can improve that performance while maximizing your security. As a result of kind of everything I mentioned, this is why many of the leading analysts have, named Cloudflare the customer choice for 2021 as named by Gartner for our Born in the Cloud WAF. Forrester Wave has recognized Cloudflare as a leader in DDoS mitigation. And so has IDC, has ranked us as a leader, as well as Gartner. And when it comes to zero trust, Gartner and Omdia has recognized Cloudflare as a leader. And to leave you with a case study that I think of a website or a service that we're all very familiar with, which is Wikipedia. Cloudflare was able to help Wikipedia stop a massive DDoS attack of around 300 gigabits per second on the TCP kind of attack traffic, and 340 megabits of UDP flood traffic without creating any latency or any downgrade of their service. So with that, I just want to say thank you. Please get in touch by emailing me or calling me, and I look forward to speaking to you soon. Thank you.
We believe that Africa's future should be built by Africa, and that everything we need is already right here. The people, the resources, and the ideas. It's just not evenly distributed. We need to purposefully create bridges that link people and their resources seamlessly. Cellulant is doing just that. We are using technology to build new types of networks, connecting those who have goods and services with those who need them. One transaction, one exchange, one relationship at a time. We believe that if we function as an ecosystem, we can all be winners. So Cellulant exists to create prosperity and opportunity for all of Africa. for today and tomorrow. In order to make the biggest impact, we started with the most fundamental vertical, one that will truly create the foundation for a more prosperous Africa: payments. While payment is a problem we are tackling today, it's not really about money. It's about what people, businesses, and communities can do when the movement of money becomes transparent, dependable, and seamless. We believe that by building and connecting these ecosystems, we can create a long-lasting impact for millions of lives and Africa at large. But transforming a continent is not a one-man job. We know it takes each one of us. It takes you. So, join us. Together we can build a bigger, better, and more prosperous future for Africa.
Good one, Chad. We now dive right into the business strategy segment with a panel and two keynotes coming up. First up is a panel on neobanking, asking the question, is it time ripe for Africa to break down banking silos? To shepherd the session is a man of many hats, well respected in the sector, Mr. Ali Hussein, co-founder and CEO at Kipochi. Ali is like the grand master in a chess game. He knows the moves that are about to be made. He knows what is coming next, what is being thought about, and in which direction the play will unfold. Only now that the chess game is in the world of tech, and the players are major companies within the tech landscape. He is a C-level exec with extensive experience in strategy, marketing, new media, business development, startups, and turnaround situations. Ali, the stage is yours.
Good afternoon, everyone. We are at that time now when we are starting to get into the meat of this two-day event. With me today is a very interesting panel, and we are really going to be talking about neobanking, what it is, what does it mean for Africa? Is Africa ready for neobanking? Are we ready to rip off the banking walls to ensure that neobanking takes its rightful place in the lives of businesses and individuals across Africa? I have with me a superb panel. Kamal Budabati, who is the group CEO at Craft Silicon. Anne Mudeu, managing partner, Muite Advocates. Lanre Bamisebi, group director, IT Ops and Equity Bank. Aristocrat Courier, who is a fintechpreneur at QUK Unlimited, and Angel Setumo, head of strategy and innovation, Leshego Holdings from Botswana. And I see two Anns, so this is we are already at the neo-banking stage because Anne is already sort of cloning herself right in front of our eyes. Guys, welcome. It's a fantastic afternoon today. I am super excited to have this conversation with you guys. We are in a country that is probably undeniably the birth of fintech in Africa. Then we have across Africa players in Nigeria, players in South Africa, players in Egypt, all focused on neobanking. Some of the reports that we are seeing coming out of the technology space is that in the last 3 years, Africa has sort of attracted billions of dollars of investment into the tech ecosystem in Africa. About 50% or more of these investments are in fintech. What I'm going to do today is I'm going to, with the help of you guys,
try to unpack this conversation around what neobank is, what does that mean for Africa, and how do we move forward in the next 5 years or so. So without further ado, let me introduce my panelists. Let me start with Kamal. Kamal, you have been in this technology space building tech ecosystems for microfinance institutions, banks, and all that. Kamal, please spend about 2-3 minutes. Give us a brief about yourself and your organization and your opening statement on how you feel neobanking is progressing across the continent. Kamal, over to you.
Thank you. Good afternoon, Ali, and everyone on this panel, as well as the people listening to this session. So good afternoon. So my name is Kamal. I founded a company called Craft Silicon. Craft Silicon provides solutions into the finance vertical. We provide solutions for banks, microfinances, payment gateways, all the way up to the products and the softwares required to run a neobank. We also run another company which is part of Craft Silicon called Little. Little started as a ride-hailing company, but then later got into deliveries and now into the payment space. Little has now close to about 1 million customers, and Little operates in several African countries. That's Kenya, Uganda, Tanzania, now getting into Ethiopia. In terms of Craft Silicon, we also operate in several African countries, both operating in Africa as well as a couple of countries in Asia. So with that, I think just a short remark as we get into this discussion. In my view, neobanks, something very simple, are just banks that are run by people with a different mindset. And I think that opens up a lot because the mindset is something that's playing a very critical role when operating a normal bank versus the bank of the future. With that, Ali, back to you.
Now come back to you on that specific statement. What is interesting is that you didn't even mention technology. You mentioned mindset. So we'll come to that. Next on the line is Angel. Angel is logging in all the way from Botswana. Angel, as you sort of introduce yourself, talk to us about your experiences as a microfinance organization that operates in a number of African countries. And where do you think the jump would be to move Leshego from, a normal microfinance institution to a full neobank? Angel, over to you.
Thank you, Ali. Good morning, everyone. Actually, let me say good morning from a warm and sunny day in Botswana. It's been very cold in the past couple of days. I am Angel Situmo, an innate strategist, innovator by day, and definitely innovator by night. I work for the Lesego Group, which is a multinational financial services company, as Ali alluded to, with an 11-country footprint in sub-Saharan Africa. Now, our purpose at Lesego is to improve lives, which also happens to be my ikigai, my life purpose, which I relentlessly pursue to deliver through innovation and digitalization. Now, with digitization and digitalization at the top of our strategic agenda, we would be inept if we were not exploring neobanking. Having said that, the future is definitely when neobanking is concerned. Consumers and business alike have become so sophisticated and will no longer accept the bare minimum from financial services. Customers basically expect impeccable user experience, convenience, which speaks to service, as well as a freemium pricing model, as in very, very cheap. These three are the top reasons why the gig economy workers and millennials switch from traditional banks to your online and mobile banking options. Now, zoning Africa specifically, we have a handful of digital-only banks, more or less around 10, compared to around 250 globally. And this presents an enormous opportunity, given that Africa has the largest unbanked population, more or less around 66% it's one of the largest after Asia. The biggest challenge with neobanks is getting it right from a profitability perspective. We have this thing we say in Lesotho to say we want to always have a win-win-win, as in a win for the customer, a win for ourselves, and a win for any partner that we partner with. So to Ali's question around how we intend to pursue this, because it's something that we're looking closely at, I will not divulge too much information as to what we're doing at the moment with respect to just seeing how we can play in that ecosystem. Thank you.
Thank you, Angel. And thank you for subtly correcting me how you pronounce Lesotho. Great, fantastic. Lanre, over to you. As the person who is at the helm of technology at one of the largest banks in Eastern Central Africa, probably the largest bank in Eastern Central Africa, Equity Bank. Give us, a small introduction about yourself, how Equity is navigating the whole conversation around neobanks, and how the incumbents are potentially disrupting the disruptors. One of the things that I find super interesting whenever I read the latest investor report from your CEO is the thing that I always find interesting is this statement, banking from something from somewhere you go to something you do. It's something that almost always there over the last few years that I have been reading the investor reports from Equity. How are you moving this huge elephant to become so nimble? Over to you, Lanre.
Thank you very much, Ali. And I must say, I'm happy to be part of this session. It's a very good day also in Kenya. It's very bright and sunny, as usually is in Nairobi. Thank you for the prenups. I really appreciate that. Equity is making a huge stride. But before I get into that introduction of myself, my name is Larry Chevy. I work as the group head of IT and operations with Equity Bank, and I also oversee the neo banking of Equity, which is called Fintech. From where we sit at Equity, we've always believed from the beginning, and that's why you heard my MD, Dr. James, always talking about Equity is no longer a bank, and a bank is not a place where you do transactions, but a place where you get your services done. And what we've done in the past few months is you realize that we've kind of removed the word bank from our name when we did our rebranding. So basically now what we have is a tech company with a banking license. And you mentioned how are we navigating with our legacy. I think it's been a long time coming that people have been talking about legacy and blaming everything on legacy. Equity has been around for 35 years. So what we're doing right now is to stop talking about legacy, but move the bank into a kind of state where we'll be able to do, what a typical digitalized or neo banking would do. And just to talk about the topic of the day, which is neo banking, is the time right for Africa? I think the time is not just right, but it's been coming for a while now. And when things start coming together, when even the countries are coming together with the new Africa coalition that is coming on. And of course, we have a very huge youthful population in Africa, which is what actually facilitates broader growth of any industry, not just banking. Trade facilitation is important across Africa. Interborder SME, you can imagine you have a credit score in Kenya with Equity Bank, and you go to First Bank in Nigeria to lend money, and they can assess your credit score and give you credit. That is what we are talking about when you talk about borderless banking, where the border is open and everybody can bank everywhere. And again, there are about over half a billion, no, sorry, about 500 million. Yeah, that's half a billion unique mobile user in Africa. That's a huge number. And what that means is that we are ready for to rip out the walls around Africa. And I'm excited to be in this summit, and we take the discussion on. Thank you very much, and over back to you, Hali.
Lanre, thank you so much for that. For a moment, I thought that you were in your new data center without any computers yet, because there is a complete white background, clean, completely, but there was sort of a bit of an echo. So I was wondering whether you were expecting some new servers to be coming on board to launch your new neobank. Lanre, thank you so much for that introduction. Anne, over to you. I would like you to give us a little bit of a nuance from a regulatory, legal perspective, if you can, as you do your introductions. As we talk about ripping off these banking walls, what will hold us back? Or what is holding us back? Because my next conversation is going to be, do we really have a neobank in Africa? Anne, over to you.
All right. Thank you. Thank you very much, Ali, for that introduction. My name is Anne Mutie. I am practicing at Mutie Advocates, which is a boutique law firm specializing in tech and privacy law. I think when we look at this topic from a regulatory perspective, is it the right time? Yes, it is. I think COVID-19 has shown us, it has just proven the fact that we do not need the physical bank to be able to transact. We can do things online. But the regulator is playing catch up and many times is really, really behind what the technology or what is coming out from the tech side of things. So I think for me, from a regulatory perspective now, we need to look into international best practice to flatten the barriers to entry for new players, to increase collaboration, to upskill our regulatory space and also compliance specialists so that we can make this dream a reality. I also think that it is the time for us to also recognize new forms of currency, cryptocurrency, digital currency. That needs to be a discussion in the regulatory space. So in my mind is, yes, the time is right. And there is activities and initiatives we need to do, which we can discuss in the session, to bring the regulator and the fintech players together to collaborate and make this dream a reality.
And thank you so much for that intro. Now, last but not least, my good friend Aristarchus Kuria. Mr. Kuria is a banker, as you can see by the way he's dressed, but he's also a fintech entrepreneur. But his background in banking is so deeply ingrained in him, he must have a tie. Aristarchus, introduce yourself. Tell us what the QQ is. Why is that bank upside down? What's up with that? Kuria, over to you.
Thank you, Ali. Thank you, everybody else who is on this call, the panelists and everybody who's listening. My name is Aristarchus Kuria. As Ali said, I'm a career banker. I've been in the banking industry for about 16 years. And in those 16 years, I championed some interesting stuff. One of the interesting stuff that I championed was at Stanbic Bank, where we lent to, SMEs, Safaricom dealers and agents, up to 50 million Kenya shillings unsecured. Okay. I've also put together what you'd call, a peer-to-peer lending platform. As a banker, banking is about intermediation. So you pick a deposit, you give it out as a loan. So you do what you call match, funding for that matter. So banking actually have what you call credit reserve ratio, which then restricts them to create as much money as they would wish. If it was zero, like it is in the US today, in the Reserve Bank, then bankers have the opportunity to create money, print money infinitely. Okay? Then I'll then describe what we've done at Quick, or the Bank Unlimited, which is the word bank upside down, meaning that this is the opportune time for Africa, with about 500 million cell phones and smartphones coming up, to be able to say, can we have a bank on the phone? Convenience at wherever you be. And at times you do it before you sleep, you want to do a transaction. WhatsApp takes about an hour of your time in a day. What if it was banking? Today, M-Pesa has showed us it's no longer about financial inclusion. It's about financial health. So at Quick, we've built peer-to-peer lending, which is digital, saving and loans. We've built insurance, so you can do your cover for your motor vehicle, for your health, for your travel on the phone. We can do FX on the phone. If you want to buy goods from UK, you can buy GBPs. If you're sending money to China, because everybody's importing from China, RMBs. You can do proper savings goals for your car, for your education that you'd want to pay. You can pay for your bills as bill presentment. And you can have a virtual cards for all that fund to be kept into, one. You want convergence, convenience, and cost. We've had discussions with Central Bank of Kenya. They've given us a consent to progress on what we're doing. So the regulator is open to these kind of discussions. Yes, they'll lag a little bit behind, but we're here to help everybody, move to the next level. Thank you, Ali.
Kuria, thank you so much for that intro. Now, I'm going to pose a question, but as we do that, I'm looking for questions or comments from my audience, and I'm still not getting any. I hope there's no technical issue there. If there is, I'm sure the director who's directing this will get back to me. We've talked about what a neobank is. We've looked at the progress in different aspects. We've looked at what Lesho is doing. Although Angela has told us if she tells us, then she'll probably have to kill us immediately after that because it's state secret. Lanre has talked to us about how equity has moved and is continuing to move. Anne has talked to us about the potential pitfalls from a regulatory and policy perspective. Korea is telling us that we are moving forward, even though we are lagging behind. Kamal has talked about attitude more than technology, which kind of intrigued me because that's a techie right there. So he's not told us, he's not waxed lyrical about the technology, but he's talked about attitude. So I'm going to pose a question to each one of you. Do we really have a neobank in Africa? And when I say neobank, please understand me, I mean pure-bred neobank. Complete onboarding of customers without having to go to the branch, without having to wait, you can do everything on either your tablet, your phone, your laptop, your desktop, and have complete fulfillment across the board. Is there one? Because where I'm standing, I haven't seen one. And when you're answering, tell me why we haven't reached that point yet. What are those pitfalls? What can we do to advance this conversation? Who wants to go first? If you don't raise your hand, I'm just going to point to one of you. Laura, you want to go first? Do we really have a pure-breed neobank across Africa? Or is that a misnomer?
Okay, so thank you very much, Ali. It's a very complex question you've asked, but I'll try and break it down, simplify it a little bit. A neobank is just a bank that is built on digital, cloud-based, and like you mentioned, you can start fulfillment and all the way to completion, all without coming to the branch. We have a couple of those actually. I oversee one of them, which is FinServe. In FinServe, we don't have, apart from the office where the staff stay, and because of COVID, they are not even in that office right now. So basically, we do everything on the cloud. And then we have well over 500 customers. And in terms of volume, last year we moved over about maybe 400 million Kenya shillings. So it's happening actually in Africa. And we look at when you look at our offering, everything is on the cloud. We don't have a bank, and there are so many other African new banks. For example, there's Eversign, there's Cheaper, there's Soul Wallet, Libya. So there are a couple of them. They are coming up and fast and very strong. And what we realize is that there's no reason why we shouldn't have a couple more. Africa has got the capital, we have the human resources, we have the brain, we have the population. So it's the only inhibition will be the regulatory. And for what you notice, there are three ways neobanks can come in. It's either they come in from a banking perspective, so like some of them, they have a bank backing them, so that gives them all the support they need. The other one is they go for the license, which some countries like Nigeria and South Africa are giving licenses. In Nigeria, about 14 or 15 different neobanks, that are making huge trajectory. And of course, you mentioned too, we are getting a lot of investors coming in to support this neobank because they understand that is the way to go. And also, if you look at it, you also see that Africa is ripe because unlike before, if you want to set up a bank, you were talking a while ago about me being in an empty office with servers. You need to buy servers and all of that. But now you just need to subscribe on the cloud, and then you have a bunch of developers, and there you are. You set up a bank. So what banks are doing, like the Bank of America, Standard Bank, and of course our own equity, is rather than trying to move the heavy legacy that we have with our old bank, been around for 135 years as we have it. We are trying to set up a new bank to frontier ourselves. So, for example, Equity Bank has got FinServe that is serving well over 500 customers, and in terms of match, and we're also doing a lot around moving money, like I mentioned. Just to give you some context, FinServe had about 279 billion.
A bit out of time.
Okay,
I'll come back to you with your finishing statements. Thank you so much. I have one or two questions from my viewers. One of them is quite interesting from Samora Karaoke. What's the role of neobanks in the land of mobile money? I love that question. Will it be neobanks or embedded banking services on top of mobile money? Let me repeat that. What's the role of neobanks in the land of mobile money? Will it be neobanks or embedding banking services on top of mobile money? That is quite an interesting question. Anyone wants to go for that? Come on.
So I think that question is really, really interesting, and it's right on the point. If you ask me personally, I personally think that and the way I think the world is, not world, but the way I think the Africa is moving and couple of countries are taking up the lead, adding on financial services onto the mobile money has taken a leap over the other one. So I personally believe that that is the approach that I think most of the suppliers and the banks are taking up. And I feel that's what going to take up the lead against the other one.
I mean, look, we are the land of M-Pesa. There is hardly any Kenyan who will tell you they don't have mobile money. So are we, my previous question around do we have neobanks? maybe I should have sort of nuanced that and asked, is M-Pesa the ultimate neobank? Completely embedded into banking apps. I mean, I will almost dare say that there is hardly, and I stand corrected, there's hardly any bank in this country today that can have a mobile banking strategy without M-Pesa embedded into that conversation. Any other comments on that? I really think that was a very good question. Yes, Korea?
Let me combine the answers for the three questions into one. I don't think moving forward, you'll ever have, full pure definition of a traditional bank as a traditional bank. Either it will have a digital element to it, or it will have a neo banking element to it, or it will have a telco into it. So I think what I'm just trying to say is that the principles of banking will remain, which is intermediation and payments. But the model is what will sort of pick everywhere to bring one piece as a whole. So if I look at South Africa, you have Time Bank, that's a neobank, digital bank. You have Discovery, neobank, digital bank. If I go to Nigeria, you have Kuda, you have Cardboard, which transformed from a microfinance into a digital microfinance, which is sort of what's sort of happening here when you look at Branch with the Century transaction. Then when you jump over to telcos, you have Safaricom with M-Pesa, which sort of gives everybody a challenge as to what digital financial services should be without a digital or a bank license, for that matter. So having said that, you come to Uganda, you have Eversend, which just got a license as a license from a traditional perspective as a microfinance, but operating from a digital perspective. They're building lots of things. Ali, we're in the same digital disruption group where we say the card is sort of one of the best in the market. When you come back to Kenya and Africa from that perspective, you have StanChart. And I have lots of respect for StanChart because even before COVID was here, those days when I used to work in StanChart about 7 years back, you'd work from anywhere when you travel across all the markets. So StanChart sort of has 70 microservices on their app. You can, get eKYC, do everything that you've got insurance, you can do treasury bills, you can do wealth. So I don't think you get a model, and you've got equity with an MVNO, which is sort of where sort of things will transcend into. So I don't think you get a pure answer where this is a digital bank, or this is now just a traditional bank, or this is just a new bank. Then you've got people like us. We've just built together a convergence of many services into one. When you look at out of Africa in China, you see Alipay. Alipay has 1,000 microservices.
Thank you, Korea. Thank you so much. Anne, you have anything to add there?
Yes, I think I quite agree with what Korea is saying. And maybe just to add, the challenge is really that we need to open the market up to other players. So when you look at Kenya, M-Pesa kind of overshadows the space of neobanking when we could have other entrepreneurs or other players getting into the space and offering what we would call the pure neobank. So what we have is more of the partnership with the banks, that you cannot really do this without a bank on your own. But can we think about a complete and pure neobank? And that is actually very possible. If you look at what is happening in Asia and in Europe, they've created a path to licensing, a path to market entry, which can be done in this market for other players apart from the telcos and the traditional banks, so that we can also increase the competition and increase the level of product and quality and innovation that we are looking for. Because for me, if the neobank is working, it's working if the underserved, underbanked people are coming on board. But if they are to come on board, then we also need to liberalize the sector. So that would be my additional input.
And thank you so much. Angel, do fintechs have an advantage over traditional financial services organizations, or has even my question sort of been blurred and sort of overtaken by events? What's your opinion? And since your organization operates across 11 African markets, probably give us a quick overview, a flavor across those markets.
All right. Let me start off by answering the initial question that you asked around whether there is a neobank in Africa. To Landra's point, I believe that it depends on, if I were to take three critical things to look at, is one, end-to-end user experience. Can a customer actually onboard and actually get a service end-to-end remotely and using self-service? Absolutely. To me, that's a core definition of neobanking. The second one, sorry, Ali, you were speaking, I can't hear, but the second one, oh, I can hear you now.
I said 100%. Go on. Sorry to interrupt.
And then, absolutely. And the second one is when you look at full stack neobanks versus front end focused neobanks. Take your examples for a full stack neobank, your Atom, Monzo, and N26, versus your front end focused neobanks like your Revolut and Chime. When you look at the international landscape, and being able to differentiate that, even though the other ones are just piggybacking on a banking license and the other ones have a banking license, it all boils down to the customer, what the customer experience. So for me, neobanking, we should always define it based on what the customer gets to do. So irrespective of where the front end is, where the back end is, at the end of the day, can a customer do an end-to-end transaction? So for me, that answers the question you asked. And then on the second question around mobile money embedded into services for a neobank, I think it goes without saying that it's absolutely critical, because when you look at pure neobanks, they operate off a wallet, and it makes perfect sense to be able to integrate and partner with MNOs to be able to offer the utmost best services.
Thank you, guys.
Sorry,
we seem to have run out of time, and I'm already sort of being prompted that, dude, you're taking space that you don't have anymore. So what I'm going to do is I'm going to ask you to wrap it up in less than a minute. If you go above a minute, I'll sort of be rude and break you off. Wrap it up in less than 1 minute, and then we'll cycle it back to me. Let's start with Kamal. Less than a minute, Kamal.
So I think my last point over here to make is the ball game in this whole business is customer acquisition. And that's one of the reasons I think, especially for Africa, the mobile operators and the players in the space who have customers are scaling up much faster. So I feel that a new player slightly difficult just because of the customer acquisition is not as easy as it should be. Thank you with that.
Less than a minute. Lanre.
Thank you very much. I think just to summarize, from its customer experience, and whether new banking is just the way you do the business in terms of whether it's technology or whether it's those are just technology. But the most important thing is, how do you as an organization build that culture where you deliver on customer experience? If you do it, everything on the cloud, that's no banking. If you can do it, both brick and mortar, have some other customers that you have to serve, that's also, pure banking as well. So it's all about what the customer wants and how, and the new method you're trying to deliver it. Thank you.
Kuria, over to you.
I think for me, the most important is actually research on the customer. First, do your research, take your time, develop products that are aligned to that research, and create a dopamine experience for the customer. Dopamine. Dope.
And over to you.
I think for me is that regulation should support neobanking two ways: create an enabling environment for market entry and conduct of business. And number two, regulations that build customer trust and confidence, data protection, AML, and the likes.
Angel, we close off with you.
Thank you, Ali. For me, the key takeaway or the key thought to pursue is profitability of neobanks. The growth in the customer base has to be commensurate with the revenue. As a closing remark, when you look at the financial statements of almost all the neobanks, it's a very interesting investment. I'll leave it at that. And I'll say watch the space.
Thank you so much, Angel. Let me just wrap it up by thanking all of you for an engaging conversation today, and to basically say the outputs from this conversation today. I heard each and every one of you talk about customer. I heard a number of you talk about regulation and policy. I had one of you specifically focused on attitude of the people who run neobanks or banks. So, guys, this is it. I'm hoping to have more conversations offline. Please go on to the CIO social media platforms. Let's engage on Twitter. Let us engage on Twitter. Let us engage on my friend Frank. Darren always reminds me, the new kid on the block, Clubhouse. Let's engage on Clubhouse, although I'm yet to enter or create a room on Clubhouse. Let's continue to have this conversation. Ultimately, when all is said and done, the customer. Thank you very much, guys. Looking forward to continuous engagement beyond this session today.
As expected, that panel by Ali did not disappoint. These insights cut to the chase and well applied can offer true competitive advantage and strategy alignment for you. A key takeout for me is on monetization. Do not create viral effects or negative unit economics. The business model must make sense. Now, in God we trust, everyone else must bring data. And there's been a lot of activity in the fintech space across Africa. It is important that you follow the money to get a better feel of what the markets are signaling. Simon Hardy, the founder of Findexable, the new digital platform for benchmarking fintech innovation globally and home to the Global Fintech Index, has this on his fingertips. As AI and analytics reshape business, his mission is to make it easier to gather, interpret, and benchmark fintech activity, enable and moderated real-time insights onto this global activity to determine the ingredients of fintech success. Simon has 2 decades experience producing financial intelligence content, research and events for global financial publishers, including The Economist, Euromoney Institutional Investor, and IFR, as well as boutique research publishers and media companies across Europe and the Middle East. Simon, you're welcome to give us the stats. Karibu.
Hi there, and thank you, Bogwa, for the introduction, and thank you to the CIO East Africa team for having us here today at the CIO East Africa FinTech Summit. My name is Simon Hardy. I'm the CEO and founder of a company called Findexable. We're a London-based data and analytics company. We're mapping the world's FinTech ecosystems and FinTech firms because we believe that it's time for a data company to help ensure that FinTech firms, no matter their location, have the same access to opportunities to investors and therefore to success as any other company. To that end, we've been working over the last year with a couple of organizations. You can see on the screen there in front of you, the Africa FinTech Network and Century of South Africa, to map FinTech ecosystems and FinTech companies across continental Africa. And what I'm going to do today is to talk to you a little bit about some of the work we've been doing, our work with the Global FinTech Index, of which the FinTech Radar, the Africa FinTech Radar, is a part, and some of the findings that we've had over the last year from various sort of data gathering exercises and surveys of FinTech firms in Africa. I'll have my email shown to you on the screen at the end of the presentation. We have got some new research on Africa coming out, so please make sure to screen grab or take a note of my email at the end and drop me a line, and our team can send you the research when we publish it in the next month or so. We created the Global FinTech Index at Findexable because we know that there's a lot of FinTech firms out there doing lots of very interesting things, but the challenge for them, and it's pretty much the same no matter what region you're in, is that the competitive landscape is enormous. The markets you're competing in are big, possibly. The stakeholders in it are bigger in the sense of trying to compete or work with existing financial institutions. And the discovery of these firms for investors is particularly challenging in emerging regions. And we think that's a problem. FinTech has proven that it's a vital tool, particularly in a pandemic and a post-pandemic world, for enabling digital innovation, for enabling digital inclusion and the digital economy. But we don't think the market for investing in or buying from FinTech firms has caught up with the reality of the last year. And therefore, what we want to do is to essentially create a central repository for information on FinTech firms so that they can be found, so that investors can see them, get information about them, and no matter where those firms might be located, potentially to transact with them, invest in them, or do business with them. So what I'm going to talk to you about now is just the FinTech Index and the Africa FinTech Radar. You can visit the FinTech Index at any point, at any time. It's an open source platform of FinTech firms and FinTech innovation. We're currently listing and ranking around 11,000 companies worldwide, and that's growing all the time. We have a big partnership network of 70-something partners worldwide, FinTech associations, ecosystem enablers, and they're also using the index and working with us to help us create this central repository of FinTech firms. The index also creates an annual ranking of FinTech ecosystems. We launched our first rankings in 2020, at the beginning of 2020, before the pandemic broke out around the world. And our 2021 rankings will be announced and launched next month. We're now ranking, rating, scoring FinTech ecosystems in 264 cities and in over 80 countries. And in fact, as a point of reference, the market for investing in FinTech went through a bit of a nosedive, as you might expect, during the first half of 2020. And then that picture rapidly changed in the second half of last year, to the point that now some 50 new countries have been added to the Global FinTech Index rankings, which I think really speaks for itself in the sense that FinTech is proliferating globally. It's enabling change. It's enabling the digital economy. The Africa FinTech Radar is part of our kind of wider global initiative, and we now rate and score 400 plus companies across the continent. We've been working, as I say, with partners at the Africa FinTech Network, with Senfree and other organizations across the region to centralize the identification of these companies. And as I say, we're now listing something over 400 companies across 36 countries. We've also been doing surveys across the region. We've been talking to fintech firms. We've been interviewing about their growth and existing market challenges and their opportunities. And some of the data that we're going to talk to you about today is very much geared around some of those sort of early survey findings. And as I mentioned, we'll be launching a full report in June on African fintech, which really looks very closely at 4 of the continent's largest fintech ecosystems. I'll talk a little bit about that shortly. Fintech in Africa has blossomed, exploded, grown very rapidly, choose your adjective, over the last decade. Started, of course, as we all know, with the mobile money revolution under M-Pesa, but it's really become a much more sophisticated place since those early days of that mobile money story. Having said that, there are only 2 fintech ecosystems, sort of pockets of fintech companies as we define them, in the top 100 fintech ecosystems worldwide, as you might expect, and they're shown on the screen there. They're in South Africa and in Kenya. We do expect, however, that this is going to change. And when I talk through sort of some of the early findings from the 2021 FinTech rankings, you can start to see, I'll give you a little bit of an indication as to, obviously, one knows where the existing hubs are, but also we're starting to see through the index where the emerging hubs are coming from. And our 2021 rankings will launch next month at the second half of June. As I say, you can visit our website, findexable.com, and register there. Alternatively, use my email at the end of this presentation and drop me a note, and I'll make sure the team sends you a copy of the research when we launch it. So what have we been doing with regard to fintech and mapping how ecosystems are developing across Africa? We've worked with the Africa FinTech Network for about a year now. We've been carrying out a survey at the beginning of this year, March and April, looking very closely at 200 fintech firms in four of the continent's largest markets. Those are shown on the screen: Ghana, Kenya, Nigeria, and South Africa. And we've added and have sort of compiled something approaching 400 to 420 fintech firms, which are now visible on the Global FinTech Index. And over the remainder of this year and into next year, we'll be compiling more information on those, and we'll be updating and optimizing our website platform so that you'll be able to see more information on each of those companies. And we will also be launching, as I mentioned, a new piece of research in conjunction with the UK Department of Trade, looking at the enablers and also the obstacles to fintech success. And that comes out at the beginning of next month. That's a report titled Ramps and Roadblocks. And what I want to do now is just talk you through some of the sort of early findings from our work. It's no surprise, really, the key hubs and the survey continues to survey data, talking to the ecosystems, talking to fintech firms themselves. The established hubs remain, as one might expect, Nigeria, South Africa, Kenya. Having said that, we're starting to see a much more diverse pool of hubs emerging. We'll see more of that in the 2021 rankings, but primarily the places definitely to watch, those listed under emerging hubs on the left there: Ghana, Tanzania, Uganda, and Rwanda. I think encouragingly, some of the more interesting innovations are more likely perhaps to come out of those emerging hubs than some of the established ones. So there is a lot of activity, and we draw attention to some of that in the new report we've got coming out. African fintech has boomed, particularly over the last 3 years. It's a rapidly growing marketplace. We're now tracking something approaching 410 firms across the continent. We expect that to grow. And I don't think for a minute we expect, I don't think for a minute we're saying that we ourselves have managed to map all of the companies that exist out there. It's simply that from the survey responses and the work we've done so far, we now have 400 on the map. Fintech is dominated by payments, and of course, Africa is no different to any other region. Actually, it is very much in line with how financial innovation, as we think about it, evolves. It often starts with a transaction and a need to enable a transaction, and then once that's achieved at a certain level, both in terms of availability and adoption by consumers, that starts to enable other services to take root. I think perhaps interestingly, and this is a little different to other markets, is that you can see on the screen there, payments has the most fintech firms by number, but insurance, actually, there are more insurtech related companies, insurance and insurtech firms, than there are banking companies, at least in our survey that the Africa Fintech Network at the end of last year. Interestingly also, I would say, and again, quite different to other regions, or certainly some of the more advanced markets, B2B, selling and providing services to other businesses, seems to be the dominant share of the number of fintechs from our first survey in the B2B arena. And it'll be interesting to watch how that evolves over the coming years, as particularly as the world comes out of the pandemic, and enabling digital activity becomes more and more essential to everyday business and personal and financial life. We looked at the companies in terms of their stage of development. I would say, and this is true in the new research coming out also in June, which looks at 4 African markets. It's borne out by the survey that you're looking at here, which is cross-continental. Most of most and the large majority of fintech firms in the region are at a kind of relatively early development stage. They tend to be smaller companies, so sub 50, under 50 employees. Some are scaling, but that is few and far between with respect to the population of fintech firms as a whole. Quite a number of them state that they have traction in the sense that they have paying customers, and that number of customers is growing rapidly. And in the June report that will come out, looking at those 4 African markets, that was a similar story, with I think more than half of those polled saying that they were in an aggressive growth phase, which is good news because it's proof that firstly that there's an opportunity in a business model out there, and secondly that these companies have found a product market fit that is enabling them to grow and potentially could enable them to scale. Most companies again tend to operate in one country only. They typically the country that they're headquartered in. No, unsurprisingly, as with other sectors, financial services firms, fintech firms, do find it difficult to operate in a cross-border capacity. Most of the organizations polled do feel that the Africa Continental Free Trade Agreement will do something to ease that and to make it easy to trade across and between borders. But so far, there's very little activity in that direction, and it is very, very early days. And I think one of the key roadblocks for organizations that have the power to kind of incentivize or encourage or even actually change regulation is really going to be, if the continent is serious about creating a digital landscape as a whole, with connectivity between markets and between the regions within the continent, that regulatory piece is going to be essential to make that a possibility and to make that connectivity viable. We asked firms what was their priority, and again, as one might expect with a group of companies that are relatively early stage, they're looking to scale, they're looking to grow and sell. Customer acquisition and the delivery channels was the sort of the number one priority. That's shortly, not far behind that is fundraising, and there again, it's another area where if the continent's ecosystems can come together, or even at the national level can work with fintech firms and work with the existing institutions and the institutional infrastructure, they really can make a substantial difference in both making those firms more visible, making it easy for those firms to succeed, and then by default making it more attractive for investors to consider them and to invest there. I think most of the firms that we spoke to in our June research coming out next month were pretty comfortable. Their investor landscape their local investment and VC venture capital landscape was strong, but nevertheless the market for international investors to access African fintech firms remains quite patchy. It's clearly concentrated around those four bigger markets, and the opacity of information, the transparency on what's there and what these firms are doing means that until that changes, I think we're unlikely to see a massive rush of international venture capital and private equity money into African fintech firms. And I would suspect that that's similar to other technology-centered and technology-oriented sectors. We as a company are looking to monitor, measure, track the success of fintech firms across traditional but also non-standard metrics. We do think that the diversity of the founding and the workforce, the teams within these companies is important. We think that's important because of not just because it's a good thing to do, but also because if fintech is really about enabling access, i.e. reducing financial exclusion, that can really only be done by a company that is representative of the world that it's serving. And so we are looking at gradually across the company, we're looking at ways to measure success, not just through the traditional metrics of founding team or performance, profit and loss, but also some of the new metrics in terms of what are the workforces and the founding teams of the companies that are doing this stuff look like? How diverse are they? Are women widely represented? And what does the talent pool or the talent spectrum and therefore the culture look like? Because we think if one can track that, I think one has a much better example, a much clearer idea as to how to build a company that can be both successful financially, but also serve society and achieve some sort of societal benefits and societal goals as well. So we do look at diversity, and when it comes to the makeup of fintech firms in Africa, again, much in line with other regions, women tend to be most dominant in sort of middle operational roles, particularly around marketing. Sadly, the June research that's coming out shortly, it was clearly skewed towards men at the executive level and certainly at the founding level. Not very many women in very senior positions within fintech firms across Africa, and we would like to play an active role in capturing the data on that to enable change. I'm just going to close off really by something that we talk about a lot here, which is to say that it's no innovator is an island. The days when a startup firm could strike up on a garage and win on their own, are really in the past, and in fact they're quite possibly an entrepreneurial myth in any case. For innovation ecosystems to succeed, they do need the institutional, the infrastructure, the incubator type architecture there available to them. It's really the only way that they can succeed. Just given the imbalances in scale between a fintech firm on the one side, the regulatory architecture, and the institutions that they're competing against on the other. So our trick to sort of mapping the success and what success looks like when it comes to building an ecosystem really is to look at the policy, look at the attitude and the mindset of the institutions that are based there, and then clearly to look at the infrastructure. How complicated is it? How bureaucratic is a market? What does the access to internet look like? Because those are the kind of ultimately the kind of key blockers and enablers that can help fintech firms, local fintech firms, to succeed. And I think if for those of you that are watching that are from the ecosystem side, if there's anything that you can do to kind of remove some of those barriers, you are certainly going to see a much bigger collection of fintech firms be successful, but also be formed in your location. As I say, our efforts really are to map fintech innovation globally. We're doing that for a very wide range of organizations. In the main, however, it's really about mapping fintech markets, for insights, both at the regulatory government level, but also at the institutional bank level, trying to understand how innovation is evolving, where are the pockets of innovation, what might be the next exciting thing, and out of which market. And we do that for our partners, we do that for our customers, and we also work, as I say, with a large group of partners worldwide to help us ensure that we're tracking and including as many of the fintech firms that are out there on our global fintech index as possible. Our Africa FinTech Radar is a live initiative. It carries on. We will be launching the first live visualization of a sort of centralized data set on African FinTech, including some of the data that I've talked through here today in June. Our FinTech in Africa report, looking at survey results from 200 FinTech firms across Africa, is launched in June. And our 2021 rankings also launches at the end of next month. So please visit our website, findexable.com, or just drop me an email and I'll make sure the team sends you the details of those research reports and gives you access to the rankings and anything else that we can help you with when you send that over to me. Thanks for your time today. It's been a pleasure talking to you. Thank you, Bogwa, again for the introduction, and also to all the team at the CIO East Africa FinTech Summit. Thanks very much. Bye-bye.
Right this second, we're closer than ever. Whether we're spread across town, across Africa, or across an ocean, we're merely separated by a moment. In an instant, we can send support, feed a passion, or strengthen a bond. It's the connections between us that power Chipper Cash. As 1 million users on Chipper becomes millions, the possibilities for what we can achieve together are endless.
Thank you, Simon, for the work that your firm has done towards understanding the landscape better. One of the more quoted statistics when it comes to the financial services space the world over is that of remittances and also trade flows. When looking at remittance and trade flows within Africa, some names are bound to come up. Chipper Cash ranks in the top 3, having experienced strong growth on the back of well-thought-out product and a good capital injection. Leon Kiptum considers himself an active thought leader in all things digital. He's a seasoned biz dev professional, an active thought leader in payments, digital financial services, and leveraging data for service excellence. Leon is highly skilled in strategy formulation, implementation, digital transformation, stakeholder management, building high-performing teams, and in crisis management. He uses his leadership capability to drive businesses through innovation and impact initiatives while inspiring emerging young leaders to greatness. Leon will share with us some of the wisdom from his many years in the sector when it comes to innovating services around customer needs. Karibu, Leon.
Thank you, Bogwa, for that introduction. I'm very pleased and I'm very happy to be part of the CIO FinTech Summit 2021. It's a great pleasure to be here and to have a conversation about FinTech, and especially the topic that I'm handling, which is FinTech innovation around the lives of our customers. As you've probably heard already, my name is Leon Kiptum, and I run a FinTech called Chipper Cash as the country manager for Kenya. And today I have the opportunity to have a conversation with this summit on innovation around the lives of customers. I'm going to start by talking a bit about Chipper. We are an African-founded FinTech, and we were founded about 3 years ago. And the foundation of our business is cross-border payments, and it is what we have focused on as a business. And it's really from a P2P perspective. So our innovation has been driven by the need for Africans to move money to each other and that has been the core of our business. We were founded by two Africans, and you may have read a bit about us here and there. Majid from Ghana, who's our president, and our group CEO, Ham from Uganda, are the two Africans who founded Chipper. And as far as this topic is concerned, and it's very relevant to Chipper, is because they identified a need that was a problem for very many Africans that were living in the diaspora, having studied in the US and at the same time having worked in the US. One of the biggest challenges they had was to send money back home. And it's because at the time that whole space was largely controlled by banks, was largely controlled by other remittance solutions that pretty much would have ridden through the bank infrastructure as well, and it would have taken quite some time. And the question was, if I'm in the US or I'm in the UK or whichever part of the world, or I'm in Nigeria and I want to send money back to someone in Uganda or in Kenya, how long will it take me? Why should it take me 48 hours? Why should it take me 2 hours, 2 days for me to be able to do that? Why can't it take me 5 minutes or 1 hour or the same day? And that was the need, because the need that was identified, and that is how Chipper was born as a solution for especially Africans living in other parts of the world except their home countries, and they need to send money back home. As a result, of course, very many other verticals were born. Local P2P, being able to send money with one person to another. And of course, the idea of the wallet, being able to make payments from the wallet, whether you're buying your airtime, whether you are making a merchant payment. And of course, there are many partnerships that enable that, merchant aggregation, and working with merchant aggregators as well to enable that. And of course, as we've gone along this journey, we have discovered there are other needs that our customers have. And some of those needs have ranged from the need to invest, from the need to save, and we are still innovating as a brand around that. We are already opened offices in multiple countries in Africa, 7 to be exact. We have an office in Kenya. We're still in the process of setting ourselves up here. We have an office in Uganda. We have an office in Rwanda. We are also in South Africa and Nigeria and Ghana and Tanzania. We are also fully licensed in the UK, and we are able to remit money from the UK to other parts of the world. So that's a bit about Chipper and the relevance to the topic that I undertake today. But for me, this is a topic that's very dear to my heart. And the reason I say that is because I have been in this space of in the fintech space for the last, say, about 8 years. From around 2013 is when I first interacted with how technology can be utilized to solve customer problems. And those were the banking days when, of course, the craze was around mobile money, mobile banking, internet banking, agency banking, and the rest of all these other solutions that came with technology. But the biggest challenge that I saw at the time when I worked in the banking space especially was that a lot of these solutions were driven by technology teams. And what tech teams would do, our IT colleagues would do, because I come from a business background. So I headed up consumer banking at some point. I was in branch management and all that in the banking space. So I was coming from the business side of things into the tech space. But what I found was that majority of the solutions that or the solutions that were being offered or were being done by our colleagues in the IT department were technological masterpieces, as in someone wants to show that I can do this. And so there was all this talk about codes and APIs and all that language that business people we did not want we did not understand in the first place, so we didn't want to engage in. And fundamentally, the majority of us began to ask one question. We can see what you're doing, we can see what you're capable of doing with technology. However, is it meeting or solving the problem that my customer has? And hence this topic, fintech innovation around the lives of customers. Because fundamentally, every business that wants to utilize technology, and especially in the financial space, must ask itself this question: am I meeting the customer need? And if I am not, then what am I doing wrong? Am I focusing on what I'm capable of doing as a business, as opposed because a lot of us say, okay, we need the best software engineers, we need the best IT specialists to be able to build the top-notch solutions for our customers to consume. But a lot of us have not asked the question, but what exactly does the customer want to consume? So we're not building the ground up, we are building from the top, coming down and telling the customer, hey, we've come up with this thing. is you can use it and you can do this and you can do that and you can do the other. And multiple times you'll find that a lot of companies will actually develop solutions, a basket of solutions, and then come to the customer and tell them, I've got a wallet now, it can do this, it can do that, it can do that, it can do the other. Very much like going to a market. And the way you find a mama mboga and she tells you, hapa niko na maembe, niko na mboga kienyeji, niko na sukuma wiki, and all these other fruits and things that they want to tell you, which one do you want today? That's how a lot of us or a lot of organizations have behaved as far as developing technology in the financial space has been. But I think there has been a fundamental shift by many of the fintechs, and not only fintechs, but also banks, also telcos, and any other person that is offering financial technology solutions, to begin to think the other way around and ask the question, what exactly does my customer need? And probably that is the reason we have begun to see a shift even in, it's no longer just about lending. There's now what we are doing, for example, as Chipper, and we thought, hey, wait a minute, there's been a lot that has been going on the lending side, but who's talking about moving money? Who's talking about investment? Who's talking about agri-tech? Who's talking about insurtech? All those things, because there are several needs that customers have, but because we had focused so much on building the technology, we forgot that there's a whole entire space of needs that customers have that need solutions. One of the things that I found in Chipper, and I think it's a fantastic slogan that the team runs with from the time I joined 9 months ago, is that there is no shortage of problems to solve in Africa. And if you can deploy technology correctly, then you can solve those problems and begin to make the lives of customers easier. And when I look at it broadly, away from now challenging our tech teams to stop thinking technological masterpieces and to start listening to their business colleagues, because that's where the change begins. Because like I said earlier, my background is business. So I've spent a lot of time selling solutions from the days when we used to sell loans in people's offices and bank accounts and all that. And we've moved to a space where a lot of this is now being deployed through technology. For example, something like a salary advance no longer needs a banker to go with a form to someone's office. It's a question of just logging into an app and actually getting one. So understanding that those needs have now been moved to tech. So away from that element of our IT teams developing technological masterpieces, the big challenge is this: how many of these teams are listening to the business development fellows in the team? Because we probably have engaged with the customers a lot more, and we are probably the people who are saying, hey, wait a minute, I like what you built, but I'm not sure my customer can use it. It's either he doesn't need it, or it's too complicated, the customer experience is completely off, the user interface is probably extremely complicated, cannot be understood. And when we begin to ask ourselves the question about the customer, we found that customers really just need something simple that works. But all these masterpieces can get lost in space because it probably doesn't work for the individual customer that has done it. So as we think through this topic, how do we innovate around the lives of our customers? In my opinion, the fundamental question that each one of us who is involved in anything fintech is, what are our customers doing in their daily lives? If we can understand what our potential customers are doing in their daily lives, then we can begin to innovate around their lives. Take our culture as Africans, for example. Where do we spend most of our money? There's a notion that is supermarkets or restaurants or whatnot. It's not. It's actually the local kiosk. And if we can understand that local kiosk is probably where most of the money goes, then we can begin to innovate around that, saying, how do we make solutions that talk into what that customer is doing at that local kiosk? And possibly the reason why our mobile money service providers have been very successful, because of that element of enabling the local kiosk owner to be able to access that solution, and also enabling me as a user on my mobile phone to be able to make a payment to that local kiosk owner. Another thing that Africans fundamentally do all the time, and this is something that you will notice is commonplace with Africans, is welfares and contributions and whatnot. So enabling people to be able to move money fast and easy from wherever they are. That's again just thinking through what the customer is doing daily, what an African is doing daily. And I'm talking about the African context because I believe that this is probably where the greatest pieces of innovation are ongoing and are required and are needed, as opposed to the more developed countries and economies. The last piece of that is you'll find there are certain essential services that people must deal with every day. They will deal with a domestic worker, they will deal with a plumber, they will deal with an electrician, they will deal with someone who is giving them some service of some sort. They will deal with the mama mboga, as I spoke about the mama mboga earlier. They will deal with someone in some way, somehow. They will deal with a friend who needs a coin or two. They need to get out of some trouble. We have to think in the lines of what is the customer, what is this African, what is this person that we want to offer a solution doing on a daily basis. And that is possibly the best way to approach fintech innovation around the lives of customers, by understanding what are they doing on a daily basis. So circling back to what I talked about, cheaper, it was really the same concept. It was, I live in the US, I live in the UK, I live in Nigeria and I'm from Kenya, I live in Ghana and I'm from South Africa, and I'm having trouble sending money to my mother, to my auntie, to my sister, to my brother, to a friend, real time. Hence, a solution was born, addressing that particular problems. So as I close, the question I have is, are we identifying these problems that our customers have? Are we understanding the lives that these customers that we want to offer solutions to are doing on a daily basis? And with that understanding, then, what are we doing with that understanding? Because that understanding should lead to projects that actually develop solutions that eventually talk to the daily life of the customer. And that's what will keep us as fintechs in this market relevant. Thank you very much.
Thank you for your fantastic insights, Leon, and for bringing us to a close of our Day 1 series of keynotes and panels. A lot more is going on online, and I would encourage you to make good use of the networking tools as we get into mid-afternoon. And now welcome Humphrey Odhiambo, Head of Partnerships, CIO East Africa, to share his closing remarks. It has been a pleasure being your host today. Bogwanje here from the CIO On Air Studios. Humphrey.
Great. And thank you so much, our MC for the day. Mbogwa, you've actually brought a lot of life, in fact, a lot of focus in what we are discussing within the day today. To you, our dear delegates who have actually made this happen by staying tuned since we began the session, this morning being the 5th FinTech Summit with a very elaborate and thought-provoking theme. In fact, on behalf of CIO, I would like to express my appreciation to the innovators who have participated in this event, founders of various institutions that are running FinTech today, having eloquently and diligently participated in this particular session throughout the day today. Now, FinTech industry is indeed growing and in a very fast pace. In fact, what is emerging right now is that we are having a situation whereby there are more regulatory issues in the banking sector, unlike in the fintech space. We need as much as possible to perhaps use regulations that can fast track our pace. Ideally, that has come out so strongly in the discourse that we have had today. To that regard, we wish to thank all the speakers who have actually taken their time to prepare for this particular session, and indeed also thank all of the sponsors who have made this session to happen for us. We thank you so dearly, and tomorrow, for sure, we are going to have, since today we had actually begun with the future of fintech, tomorrow we begin with the future of payments, which we are so glad to have the co-founder of Cellulant, Mr. Ken Joroge, who will spice up the moment for us as we begin the day. Don't you miss it. And until tomorrow, when we are going to have these sessions begin at 8:30, please enjoy the ongoing engagements on our platform. Thank you so much. And tomorrow, signing off from the on-air studio, it is your host at this moment, Humphrey Odhiambo.